Trial. Trial.
Good morning, everyone. It's Tim Fairweather here. Hope you're well. Let me just do a bit of a mic check. Make sure we're coming through all right. Roy's saying sounds good. Should be on the right mic. Okay, fantastic. Great. Well, coming in loud and clear. Thanks, everyone. So I'm taking a look at the Trading Room chat channel. I'll be hosting the first half of today's US Brooks Price Action Trading Room. After a couple of hours, Price Action Rose is going to cruise on in around about lunchtime and take you through into the end of the session. I'm not sure if I've got the questions box on GoTo working, but I do have the Discord here, and we'll see if we run from that for now. Okay, great. So as usual, we're just going to follow the process that we always do. Have we got any news coming up? So I can't find any red news on Forex Factory. Hi to those in the room. G'day, Rory. Hi, Tony. Got Quatta. Hi, Mason. You got Eudoxus and Kaylin. Thanks for tuning in. So yesterday on the session, we had a pair of bear bars, and I want to talk about this pattern. It's a very common pattern on the open, and you'll hear basically I've heard all the presenters talk about it. It's a trap on the open. So this is a pattern I'm very familiar with because for a lot of years, this was my first loss of the day, always. It just seemed to be the first trade was a loser. And that got me thinking about how about I wait to see if the first trade works. And okay, I missed it. That's okay. I haven't risked anything. I haven't gained anything. I'm fine. What happens if someone gets stuck? And what happens if someone gets stuck is it often sets up a measured move. And yesterday's was picture perfect. So this pattern, if you screenshot that, put it in your note-taking software and go and look for these on the open, I think this is going to be very valuable for you. We're going to talk about variations of this. We've upgraded to a new version of GoTo, I think. So, cheers, Ken. Ken's saying I can turn the questions on. Okay, I'll wait for the start of the session. Cheers, mate. So why would you not sell 3, for example? In order to take a look at 3, let's look at it the way we would in a session. Why would you buy 3? Why would you sell 3? Why would you do nothing? Let's talk through it. Because you need to have prepped all these before you get into the session. For most traders, I think waiting for bar 6 is going to be a great addition to your trading strategy. Hi, Gion. Always wait for the first 6 bars. Beautiful. Okay, we got people saying close inside the range of bar 1. Okay, so 1 is it went below 1, but did not close. So before that bar ended, there were traders who were buying back shorts, not willing to hold into close. More bulls. Okay. Mason's saying it's a good bear bar, but it's too early. It's the low of the current range. Yeah, I think that's fair. What else? You don't need to see all these factors, but the more of them you can see and the more relaxed you are to see them, the less chance you're going to bungle the first 30 to 60 minutes when the bars are large, the volatility is big, and then you've got to spend the next couple of hours getting back to green. Cheers, Dave. Yeah, thanks, Dave. I'll give it to Dave at the moment. It's not a bear trend, right? We've got consecutive bull bars. We've got a gap up. This is a breakout above here. So it's a breakout above yesterday's high. What was yesterday? Yesterday was a bull bar. So we're breaking above a bull bar on the daily chart. We're also in a tight bull channel on the 60-minute chart. So selling is what? Selling would only be a scalp. You're selling to come back to a pullback area where high time frame traders are probably going to buy. It's above the moving average, yep. Even though we've only got 3 bars of the session, it can be helpful to see this as a big bull breakout. So if we measure from yesterday's close to the high of 2, it's not even a 50% pullback. And a 50% pullback is a fairly reasonable, robust trading strategy. Yeah, you get 1 risk and 1 reward just to test a prior high. It's typically a high probability trade. So you're going to get more than 1 to 1, and you've got basically 60% hit rate. It's a great trading strategy. So selling below 3, bad idea. Now you've got consecutive bear bars. So how does that change what you're doing for? Is it now sell the close? Is it all in short? Because if you're ready to talk about 3, then it will flow into 4, 5, and 6. One of the big issues is, you start the session late, you haven't got in sync with what's happening. No one mentioned that 3 did not trigger bulls above 2. So it was not possible for you to buy above 2. So if there are no stop entries above you, it's not super bullish. If I'm a bull, I really want bulls above my position so we can go on them out. Kayla's saying with a tight stop, it might be a good sell. Okay, why? Let's work on Al talks about you need at least 2 reasons to take a trade. What are your 2 reasons? The more time you spend on these reasons, the easier it is going to be to say, look for a trade, don't look for a trade. Save your energy while you trade. You're basically betting on, you're saying this is a breakout, 1, 2, and you're getting a measured move down. 3 and 4 breakouts. Nice, okay. So you're saying 3 is an attempt at a breakout. It failed because we closed back in the range, and then 4 is confirmation. Okay. So then you're selling 4, you're putting a stop at the high of the day, and you're looking for a measured move. Usually when I'm looking for a breakout measured move, what I'm saying is my probability is 60%. Because that's what I need to justify 1 to 1. But at this point, we've got a gap up, and although it's below 1, it's basically a 50% pullback. So for me, I just say it's 50-50, so I cannot sell 4. So it's very easy for me to say, can't sell 4. Can't go for 1 to 1 if it's 50-50. Okay, if you can't take that trade, what about selling above 4, selling the close of 3, selling a pullback? Well, these depend on what the next bar is. So now if you're short above 4, what did 5 not do? Someone's saying gap close. Yeah, I agree on the gap close, but in order for that gap close to make me think about that, the sell would be here with a stop above there, but I would usually wait for a second entry. Weak close, yep. It didn't trigger bears below bar 4. Okay, great. So now we've got a lot of information. So 2 doesn't get triggered on 3, 4 doesn't get triggered on 5. So at this point, put a box around those, failed breakout, 2 reversals. So I think by 5, you're starting to change how you trade. Yeah, nice. I'm looking at the answers in Discord. Yeah, that's great. Someone's saying the bull bar didn't close on its high. Yep. Yep, none of them are strong, all overlapping. What about context? Gap up above the 20, above the 200. Small bull micro channel. That low is 98. That low is 98, so micro double bottom. So you're starting to get these micro structures in there where traders will buy, betting we're going to run the stop of those bears. Okay, JC is saying top of the trading range. Okay. Yeah, high, low, every bar. So is there a trade on this bar? What's the bull trade? What's the bear trade? Because if you saw 2, 3, if you see 4, 5, there are some trades you're not going to take. Okay, look, you're middle of a trading range, wait. Weak bull channel, wait. Okay, nice. Better away from more inflow. Okay, great. Yeah, and I think that's reasonable. So now we've got a bit of a triangle, we've got a trading range, probably better to buy low. And if it's trading range, you usually need to scale in. So you cut your position up to scale in. And if you want to sell, you usually want to sell a test of the high, scale in higher, betting gaps are going to close. But at this stage, if I had to bet on whose stops are going to get run, do I think the bull stops or the bear stops? For me, bear stops. See what happens. See what happens. So now on 3, all the bears that sold with a stop above 3 or the high of the day, they've either been stopped out or they're having to scale in. So if you're trying to wrap your head around that, what you're saying, well, you're saying anyone that sold down here is probably out, or they're selling more and they want to get back to a break-even point or the midpoint of their entries. And that means there's a layer of support at those areas. So by waiting for this breakout, 4 consecutive bull bars, buy below something, buy a test of a breakout point, buy the 2 high, you had a chance for a swing up. Now you've got a spike pullback, 3 or 4 legs up. It's probably going to reverse somewhere around here. It might be a higher high or lower high. So now bears are going to look to swing back to 3 high running swing points. All the bars are overlapping all the way through here, so it's not a strong bull trend, but bullish enough to expect bulls below swing points, I think. So if you bought below a swing point, expecting a trading range, 54 got you long, 55 is consecutive bear bars closing on their lows. So I think it's okay to look to buy low in a trading range, but what does failure look like? That's what failure looks like. Now you've got all in short, possible measured move down, look to sell a pullback, 1.8 or 01. So reasonable to be long for the high of the day, reasonable to buy a high 2 for a swing up. And then if you didn't do anything in midday reversal, or if you took a loss, now you've got a low 1 short, consecutive bear bars. I think it was a trade there. Any questions on yesterday? Okay. So common open, trading range open, but gap up, and you've got buy signals. So probably best to bet that the bears are going to have their stops run. Surprising pullback here, and then once you get that, well, you can do the same. You put a fib in the middle of the day. Traders buying in the lower half, probably going to close around the midpoint. So. Question from Mason, do you start counting the legs after bar 16 breakout? Yeah, it's a good question. So at this point on the open, I'm just looking at reversals. I might be looking at the overnight range, and I'm looking to see what this is doing. Well, by the time you get 3, 4, 5 bull bars on a higher time frame, you need to be buying pullbacks, 1, 2, 3 legs up. So I think you could have used a higher time frame. If you're using a 60-minute chart, your consecutive 60-minute bull bars is probably 20 points or so above that. What are the realistic entries? Okay, on an open like this, So I'm doing exactly what I'm saying before. I think that's the target. Maybe I use the high of the day. I'll definitely use the high of that bear bar, and I'm looking to buy in the lower half or lower third. When I see 13, this is a sell signal. I typically won't have my limit order there anymore. I'll wait to see what happens and then see if I can buy in the range of 14, but it doesn't matter. Now we've got a new high. So now, well, we've got a new high of the day. This is the new spike. So buying 50% pullback, consecutive bull bars, 3 consecutive bull bars. Look at a 15-minute trade. So buying, probably move the stop up and probably exit above 30. Or if I'm still trading, this is a little bit late for me. So, but I wouldn't be doing anything on 3, wouldn't be doing anything on 2. Is this open the same or different to that one, do you reckon? Okay, someone's saying different. Let me just see if I can put them all on the same. Same pattern, different look. Yeah, I agree. To me, they're exactly the same pattern. Looking for a double top, looking for a double bottom. I know the highest probability on the open is a trading range, and then I'm looking for some kind of a measured move of that range. You can use a small leg, you can use the whole range, but after bar 18, bar 24, you get a new high here. We're all in long. You can buy, you can wait for a pullback to buy, but all bears are cooked. So same pattern. This is just the compressed version. Anyway, I thought it was interesting that that opens. Let's take a look at high time frames get set up. Well, we've got the start of a new month. We've got to pull back to the monthly moving average. We reached our breakout point. So this was a prior high. We broke above it, and now we're testing the top of that range. We didn't get a measured move of that whole range. That would have taken us up much higher. What's that? 7,800, 8,000. But this is an important price. Can the bears close below the moving average? Consecutive bear bars. That's going to limit the amount of bulls I think they're going to buy up here. Some will wait for a double bottom around that breakout point. But it's also at a monthly moving average, which on your high time frame accounts is a great place to add to your swing positions. So even though we went through this moving average on a monthly chart, there are traders who are looking to buy and buy lower. If I get SPX, so we reached 5%, we nearly reached 10% down. So I'm always talking about counter trend wedge setups. So by the time I see 3 or 4 consecutive bear bars, do I think that's the start of a new bear trend late in a bear channel? No, I'm looking to buy the close and scale in lower. This is stronger than anything before it. So to me, that is a warning. That is possible climax ready for reversal. Where's the target? Probably the moving average. So it seems scary to do, but particularly on ES, on high time frame indices, waiting for bear breakouts. If it gets follow through, no worries, you just get stopped out, or you can trade small and buy more. But I think it was reasonable for traders to buy the 200, scale in lower, and get back there. Here. And we're basically in the middle. So we might need to form a triangle here. Weekly charts, we've got 1, 2, 3, 4, 5 consecutive bear bars, and this bar pulled back two-thirds. So all of these bars go into the range of the bar before. So this was the channel on the daily chart we were just looking at. So this is saying that traders are seeing a bear bar. If you're selling small, you're waiting for a pullback to sell more. And traders are getting out at a new low. If this closes as a bull bar, this is going to be a great buy signal. No, it's probably a pause, and the bears will need some kind of a second leg sideways to down. But I think it's all about this breakout point to the left-hand side. And we create some kind of a double bottom, micro double bottom, and start going above this bear micro channel. A doji is a trading range bar. So when I see a trading range bar, I'm thinking about a measured move of that range. We've got a measured move. So the high of that bar is a magnet. This is on the continuous chart. This is a bear micro channel, 4 consecutive bear bars, okay to sell. Bulls need to get all the way up here. I think the high of this bar and the high of this bar will be magnets as well. And let's take a look at where they are on the chart. So they're all a little bit below. So for me, probably a bit of a bearish bias on the open. Will we get a trading range, maybe a bear breakout, and see if the bears can close those gaps? Go to meeting questions. There's not much I can do about that, sorry. That's a measured move of yesterday's range. So the swing target for bears would be 2 times that range, but we're already at a measured move on the overnight. Yeah, it's a bad sell signal bar. It's a bull doji. So good that we've had 20 bars under the moving average. Bears selling anywhere near it for a scalp down, but the low of yesterday is a magnet. $60-minute chart. Who's got market control at the moment? Well, 5 consecutive bear bars closing near their lows below the moving average. 1, 2. Do we get 2 legs sideways and leg 3? That could make sense. We're testing a breakout point here. Bulls might argue double bottom, but 5 bear bars, 4 bear bars, probably a little bit too strong to the downside. This is a tight bear channel. You might call it a parabolic wedge. 1, 2, maybe 3, 4, or 3. Bears expecting a couple of legs sideways to down to the moving average. So we might be breakout mode. When we break out of a bear channel, we leave behind a lot of breakout points. So these also line up with those breakout points that we might need to go down and test. So I think that will set us up. So where do the bulls need to get to? That's the red line here. Today I would have been trading. I didn't trade Asia this morning. I traded oil in the morning. I was on the stream saying I thought it was a reasonable buy at 100 on Brent, and we're now trading just under 110. We had a major trend reversal, but probably difficult for most of you to trade unless you're in Asia time zone. So same pattern, counter trend wedge on a higher time frame. So 3-legged pullback, overshoot of a trend line. I thought reasonable to buy 100, looking to scale in lower. Then we had 1, 2, 3, 4, 5 legs down. The toughest thing about these entries is that just before they take off, they typically do this. Not strong enough to get a bear breakout. The bear breakout will be down there. So not a good sell below. Okay, great. So bulls took out that lower high. What's that thing? 38.25, 38.50. So bulls have taken out that lower high, so bears get one more leg down in a trading range. The average daily range is about 80 or 90 points. How big's this gap? About 95 points. The low of the day is 27.50 and the open is 27.75. So not a perfect shaped bottom. Odds of closing the gap up here, less than 10%. Odds of closing this gap here, my stats say about 30% or less. Whenever we have a big gap on the open, I think to myself, trading range day. If we look at the daily chart here, you can see I've got this average bar range. You can use average true range. This is an 8-bar look back. This is just giving me a measure of volatility. The bars are about 80 points tall. If I use the continuous chart, the bars are about 130 points. The reason I expect a trading range day after a big gap is that we've already done, on average, the range. We might go a little bit below, we might go a little bit above. When was the last big gap? Bull bar 1 hasn't triggered above the high. So big gap down, which is bearish, but immediately a bull bar. On the 15-minute chart over here, we're in a bear trend. We did take out a swing point here. 3 legs down. So possible wedge to a double bottom, but I'll still look at this as a breakout and follow through. So I still expect this to get a small second leg sideways to down. Was it this? Maybe, we'll see. Not clear for me on the 15-minute. So probably trading range here. So also remember the volatility is elevated. VIX is around about 27 at the moment, so you need to adjust your trading size. We overshot the measured move of yesterday's range, so I think we're going back up here at some point. 65, big round number. Nothing for me to do here. Can the bulls get consecutive bull bars above the moving average? They weren't able to here. Can they do it on 15-minute chart? So bar 2, final couple of minutes, becomes a bear bar closing on its low. Where is it closing? It's closing right in the bottom third of a possible trading range. So that red line, I think, is a buy zone. I'm currently flat, but I'm looking to see whether it holds. A bit too directional for me to suddenly hit by the close. For bears, well, okay to sell 4 or 5 consecutive bear bars, okay to sell above. Looking to sell a pullback. This is disappointing if they got stopped out. 38.25, 38.50, or they sell more, and this is probably a break-even area for them. 2 is also a low one short. This is a bear breakout. Technically, it didn't pull back above anything, but it's a sell signal. Remember yesterday, didn't go above 2, didn't go below 4, didn't go above 1. We did go below 2. Okay, so that means if we go above 2 now, there are bears that are stuck. How do I know bears are stuck there, even though I can't see their orders? Well, I know nobody is selling below 2 and hoping, oh man, I really hope the next bar goes above my high. So this is an area where traders are going to have to take a trade management action. And that's information. Those slight changes in probability is what I think scalping is all about. Hi, Marcus. Marcus saying March 26th. Yeah, I think that's reasonable. You've got an attempt at a double bottom. We break below, we break above. And then so these lines are the breakout point. Bears that sold are going to have a chance to get out of that short position around there. Yeah, that makes sense. You take a reasonable trade, you don't get stopped out, you get a chance to exit. What about news? What about conflict? What about inflation? The more you can ignore all of that news and just look at the bars on the charts, I think the better your chances at keeping your trading account will be. So 3, not a great buy signal. So probably not a lot of bulls above the 3 high. Would you buy the close of 3? I wouldn't, because we're in a bear spike. So I don't want to start buying the close. I think traders that are buying are using this trading range here. They're buying the midpoint, they're buying the lower third, they're betting there's a layer of support down here. Hi, Akut. Yeah, me too. Yeah, strong biases before the open. I used to spend like hours before the session. You know, this is a few years ago, quite a few years ago. And I thought that all that prep would somehow make me a machine on the open. It didn't. You know, you stick to a bull bias, the market's going down. You stick to a bear bias, the market's going up. So I think, you know, 15 minutes, 30 minutes prep time is right on. If the bulls now print consecutive bull bars above the moving average and above that swing point, doesn't matter about whatever the news was here. Big gap down, common outcomes, 3 mini legs down, and then failed to break out above that high. This is what the 15-minute chart looks like. We just tested that high and we're hovering around the midpoint. Second entry short in the moving average. 4 consecutive bull bars, probably need a second leg sideways to up. Now traders get a third entry short. Sideways, second entry short of the moving average. If you took it and you didn't take profit, now you've got an equally strong bull breakout. So probably trading range or trade a second leg up of this. We've had 1 reversal, we've had 2 reversal, but not a lot of bars yet. I think we're going back to the measured move of yesterday's range. I'm a bit too close to that target. Can the bulls get a new high of the day? Can they close above the 2 high? So if you're short, you're hoping price gets back to your midpoint. That's if you use the wider stop. If you've got a stop above 1, you haven't been stopped out yet. Other traders will see it as a trading range, so they wouldn't sell anywhere here. They wouldn't take a stop entry. They'll sell above the high of that bar and they'll scale in higher. So they wouldn't take this sell. They'd sell here, sell higher, betting that this gap's going to close. Measured move of that spike would take us up to 73. Let's measure that better. It's saying 72, 75. Will I get a breakout pullback buy for that target, or are we just going to stay in the trading range? So some traders saw a break of this range. They see the range breaks here. They buy low in the range, low third, low 50%, gunning for that high. Nice. So bulls working higher, flipping that bear bar. So similar setup here. So 5 is a breakout bar. It's breaking above the high of the day. It's also a pretty big bar on the 15-minute chart. Can the bulls get a pullback? Bulls might see this as a major trend reversal. Lower low major trend reversal, followed by higher high major trend reversal. So a measured move of that bear spike on the way up would be there, but we're a little bit close. So where will the bulls buy? What if they buy, pull back to that swing point, stop at the low of the day? Consecutive bull bars. What can the bears do here? Well, the bears want to get back and close these gaps below. 3 high, 2 high, 1 high. I think 3 consecutive good-looking bull bars, 2 of them big and getting larger. Second leg up, more likely. One problem the bulls have is that this bar is very big now on the 15-minute chart, so it might need to pull back on the second bar, or traders will see what the follow-through is. So probably always in long after the bear trap. Still, the context is likely to be a trading range day, but after a spike with multiple gaps, you can only buy or buy lower. I'm long on 5 and looking for a target 72.75. Coming up to a close on the 60-minute chart on the overnight. So we broke out of the Globex, broke the Globex lows. Let's get rid of that. This is a breakout point here. 60-minute ETH lower high. So bulls would love a bigger target at 97.75, which is yesterday's low. So that's a measured move on 60-minute overnight. Because the gap's big, I might just keep the overnight chart for now. So going above that 15-minute bar, going above that 60-minute bar, that's good. Will we come back to these breakout points? So 5 and 6 are breakout and follow through above 1. I think we already hit the measured move. Yes, we already hit the measured move. But breakout and follow through, good looking bull bars, highest likelihood is a second leg sideways to up. Probably buyers below 6. So this is a breakout point. So remember on the 15-minute chart, we hit that breakout point, came back in the range. So we might need to do that on the 60-minute chart. So bears probably want us to come back down to the 1 high. Still always in long, so the only sell would be to take profits on a long entry, not to initiate a short entry. One thing I really admire about Al's trading is that he's incredibly patient and he's happy to spend his time working out what the probability is before taking an entry. So if I'm doing something that's low probability, have I got the right risk reward? If it's high probability, I'm looking for a trade in that direction. If it's high probability, I'm looking for a trade in that direction. So even if the bears get a deep pullback, the odds on a V reversal are about 20%. So if you repeat this 100 or 1,000 times, you're going to get a lot of second leg sideways to up. The bear bar 7, is 7 a good sell signal? Is it a buy signal? What's 7? And now what's 8? Someone's saying good location for bears to sell. Okay. Yeah, always in long though. Yeah, so for me, I would just remove the first sentence for my own trading. I just say always in long. Yeah, bears need a double top. They need to break a trend line and then get a good looking reversal bar. Thanks, Denise. 4 consecutive bull bars, bull micro channel, not a good sell signal. That's right. So 5 is actually a buy below if you're a scalper. So you can look for good signal bars or you can look for bad signal bars and do the opposite. So this is the second leg on 8. Can we get to the moving average? So far, stop entry bears, are they making money? No, they lost on 2. They would have lost on 7. You could be a limit order bull buying below things. You can be a stop order bull buying above things. So we've got a bull outside bar. So buying during 5, bull breakout for measured move. Buying a weak sell signal, which is below 7. Buying a test of a prior breakout point. You can use 5 high. Did it touch the 5 close? 39.75. Yeah, 45.50. So long on 5, add-on below 7, exit the add-on above 7. And then wait for more information. Now, how do I know that 7 is a bad sell? Well, I often share this story on the stream, is that for many, many years, I would be the first trader to sell below 7. First trader to sell below 2. I spent my whole time feeling uncomfortable that I wasn't in a trade and then not being willing to buy because the risk is so big. So looking for the sell signal and going, oh yeah, oh, I'm happy to risk 13 points, but not 40, and never cared about what the likelihood of that trade is. Do you think I held it for 2, 3, 4 times risk? Of course not. I was a horrendous trader, low self-esteem. The moment there was profit there, I would take it. And the moment I had a loss, I would add to it because I couldn't take the loss. So you can research bad trades or you can research good trades to help you build your trading system. So big bull bar here, how big is it? Well, that's about 40 points. So 2.5, 3 times the average range. Some traders will say, no, that's too big. I'm not going to buy there. I'm going to wait to see the follow through. These huge bars, 2.5, 2.5, 3 times average bar range. It's actually a credible fade strategy, but even though the maths make sense, I was never able to execute it well. So not every strategy you find, you'll be able to trade. Oh, Tiffany, did I describe you? Hey, no worries. So this is called a weak reversal fade. So I would highly recommend, I've got some videos on YouTube you can use to practice. It involves drawing a lot of zigzags. Looking at breakouts, second legs, and just get a pen and paper and find how often breakouts get a second leg of any size. Yeah, no worries. So you can, I've got a couple of videos on it, but I would set a timer for 20 minutes and just do it over and over and over again. Now, at the time I was doing this, I didn't realize what it was doing to my trading. but this stopped me from scaling into losers. So I won't ruin the probability for you. You go and do your research on it. But that, I didn't realize it was going to help me stop scaling into losers, but it did. You're way better off getting out. Yesterday's a good example. I wasn't trading here, but if you're long in a trading range and you see this, what are the odds once you see that? Second leg sideways to down for a sell signal. Is 57 a better buy or a better sell? It's better sell. Bear bar closing on its low. We just took out bull stops. Trading range day, probably need to get down to the low third. So this leg, very tradable. So I wouldn't trade this, I'd trade this. If you trade this, you can trade this, or at least avoid a loss. Andrew, okay, how did it help you stop adding to a losing trade? Well, once you do the maths on that, so you write down pen and paper and just mark, okay, so bull breakout, got a second leg. So I'm going to do 2 lines for the second leg. What about 4 consecutive bull bars? Did it get a second leg? Got a second leg. What about 4 consecutive bull bars? Did it get a second leg? Got a second leg. Did this get a second leg? Yeah. Did this breakout get a second leg? Yep. Did this breakout get a second leg? Yep. What about this one? Yep. Oh, no. So 1, 2, 3, 4, 5, 6, 7. 7 trades. You don't have to take all of them. My recommendation is just not do the opposite. And that's why you need to, I think, avoid scaling into that losing position, because now you've got a new breakout. And this breakout's better than anything to the left. So even if that fails, who cares? Once you've done the research on that, you know what the odds are. No problem. You will enjoy the loss. Does that help? So when you scale into a loser here, what you're saying is, oh, that breakout's not going to get a second leg down. So 9, second entry short, but in a bull channel. Okay, that helps. Yeah, awesome. You didn't get it. Okay, I think there are traders in the room who did, so feel free to type in there into the chat and I'll take a look. So bull follow through, kind of, more of a pause bar, but it's not a sell signal. So probably sideways to up more likely. So do we think this breakout here is going to get a second leg? Here is a breakout. Does that have a higher probability of a second leg up or a second leg down? Nice. Now you don't know where that's going to start from, but you don't need to. That's going to prevent you from selling it. So we broke through the 200. We're coming back to test it, moving average a little bit higher. We've got the measured move target here. So the advantage of that strategy is filtering out weaker trades. So you're going to stay flat more often. So in the chat, people are going to get in and get out before you. That's okay. So I'm doing nothing here. Now I'm looking for a second leg trade. Now that's where's the oil right here? So some traders are buying in the trading range here. They're betting the bears are not going to get a breakout. What do you do after this? Do you reckon this is going to get a second leg up or immediately reverse and get a new low? Is this sell or close? No one typing in the chat on that one. No, it's not. It's either buy the close or wait for a pause and wait for a bull bar. A bull bar. This is going to be a spike and some kind of a channel. So I would just ignore this bit and just focus on this bit. Oh, did I measure it correctly? Or... yeah. Now that we're getting tails on top, yeah, so tails on top, let's bring the oil chart back, mean this on a lower time frame. So if you see tails, think of this. They're buying low and taking profits at new highs. They're not taking everything off. That's what tails look like. And if I go to probably the 60-minute, might be too strong. There you go. Yeah. So tails mean channel after a spike channel. Lower time frame, this spike pullback, high 1, high 2, high 2. So we did test that breakout point. So bulls will want 97.50. We need to go sideways, form a range, and then do it on a second piece. It depends on the 15-minute chart. So gap down, bear trap. So it's a small sell climax. So bears that sell anywhere here. So this is a swing long to buy, but you can see a lot of traders waiting for a bull close, and then this is the big bull bar that takes off. And then 1, 2, 3 legs down. Can you buy here on a reversal? Yeah, sure. I think better to buy above that breakout point. You can buy this bull bar or consecutive bull bars here, 3 consecutive bull bars, or wait for a bad sell signal. That's a weak reversal fade as well. 5 consecutive bull bars. Do you want to sell below something? I don't think so. You want to buy below that. So here, this is, even though it says spike and channel or breakout and channel, to me this is just a sloped trading range because bears were able to sell above everything and get break even or make money. They never really got stuck until here. Nice. Okay, so we got to the measure move on the 15-minute charts. So I'm flat on my swing now, so I'm flat on the swing, flat on the scalp. You can still be long, you could be adding to your long. Next target for the bulls would be yesterday's low, and if the stop's below 8, will this be the buy zone somewhere in here? Gion's saying, is the open of the month a magnet? Yeah, I think open of the month and the close of last month. To me, this was the higher low. So if let me just check, I've got that on. Visibility. Where is that? So even though that was a magnet on the monthly chart, if you're trading the 5-minute chart, there's a swing either side of it. So if you're going to use a higher time frame, you've got to be a bit more flexible in your targets. So it's a third attempt to reverse. So we've got a breakout 5-6. Some traders might just use those 2 bars and expecting a measured move somewhere up there. This is 1, 2, third attempt to reverse. Will this become wedge top, lower high, bears try and get a swing down, or will it fail and the bulls get another couple of legs sideways to up to those targets? See, now that you're flat, are you looking for another entry for the low of yesterday? Yeah, I'm looking to see how this is going to play out. So the advantage of having a 15-minute and a 60-minute chart is it gives me room to targets. So I get patience here. If we're going to get up to that target, I've got room. If we're going to go down here, there might be room. That's one of the problems I had for a long time going into a 2-minute chart. You don't get the patience of this. And if I put a 1-minute chart on here, now it looks like a weak channel. And the more you read into it, you'll start convincing yourself it's some kind of a reversal. So this box that I've got here would be a stop below 8, buying in this box for yesterday's low. So on the open, common open wedge top to moving average, these are more two-sided. But if we look at today's price action, this is a tight channel. So I think bears are going to have to work a little bit harder to convince anyone to sell below something. Bearing in mind, selling below something has been has had a 0% hit rate so far. So that's the end of the first hour. We've got a big bull bar, and I think there's a good chance we're going to go one tick above it. This was a tight bull channel, a couple legs sideways to down. Right in the lower third. So where's the top third of this range? About 85.50. 85.50. So 10 to 15 points higher. Hi, Alan. Yeah, 99% chance it will touch the EMA. That's right. So traders bought below 7. They bought the close of 9. They bought below 11. So strong bull breakout bar 13. So yesterday's low, measured move target. Looks like the marker's vacuuming up to targets. Will 13 pull back to the 11 high or the 12 high? So good on you if you took the swing on 12, buying 12 with a stop below 8. There's your 2-to-1 target. Can we get an outside bar up to yesterday's high? This is a gift, 13, 14. 13 itself was a big bar, and now 14 even bigger. So we got up to the higher low. Yesterday's high, I think this will be proper taken gift. What do you do with a bar that's 57 points? Well, that's about a day's range on ES, so I wouldn't be doing anything on this bar. Just enjoying the show. If you're long, congratulations. Hopefully you're not short. Bulls really need to get above 6687. So you could see as consecutive wedges or a wedge to a double bottom. For me, either way, you need a buy signal or a bull breakout from measured move. So bulls waiting for probability, waiting for follow through. On the open, here's a sell signal, it's a gap down. Well, if you take it, what do you do when you go above 1 with a bull spike. It's probably now by the close, looking for a second leg sideways to up, looking for a test of the moving average, seeing if the bulls can keep a gap open. Hi, well, Captain, do I get FOMO when I see bars like this? I used to. Yeah, it used to be really strong. So I used to see this and then like buy, just hit buy the market. But I could never manage it well. So they usually just ended up being big losers, or, you close it here, then it gets a new high. And so I looked at my trading and then thought, okay, because in my trade tracker, my little spreadsheet, I put the setup. So I look at one big breakout bar as a setup, or a what's called a Z bar. So, larger than a couple of standard deviations. And they were net losers. So I just got rid of them. So what do you have to do? Well, you mark up your trades and give it a setup. Is it a low one short? Come up with a style that you can repeat so that you can get 20, 50, 100 trades, and then have a look at what setups work out. On my blog, I put a template. I presented in Orlando talking about this. Okay, the Z-saw was 3.6. So is that like 3.5 standard deviations? So I like, I said on bar 4, we've got good bar on 4, and then even larger bar on 5. So this is a good breakout bar. They're similar sizes, getting larger. This is climactic. Cheers, Richard. Okay, there's some news. Well, I mean, if you're long and you see that bar, then you say, thanks very much. And if you're flat, you're waiting to see follow through what happens. So if you go to my blog and type in Orlando Bloom, David, you kept me out of shorts today. Well, you're welcome. You can buy us a coffee next time I see you in Orlando. It's the only time I drink Starbucks. Yeah, so I've got a spreadsheet here. But the columns in here talk about the setup. So give your trade a setup. Could you do this automatically? Yeah. Could you build an app with Claude in about 5 seconds, which would be heaps better than this? Absolutely. But there's something to be said for taking time to put your terrible trades into a spreadsheet. You want it to go away, but if you have to, if you added 4 times onto a horrendous trade, having to plug them into a spreadsheet has the effect of saying, don't do that again. Or someone said to me, hey, Tim, I take too many trades, so I don't have time to mark them up. Well, the answer to that as well. That's it, Nice. Me too. I hate to put the mistakes on there. Yeah, that's it. You don't want too many reds on that sheet. Yeah, and then you can, I highlight mine when there's strings of losers, because you're going to get it in any probability distribution. That's really difficult, just not to change your strategy. Yeah, bulls are stalling. Buying here, where's your stop? Your stop is 40 points away. Yesterday is a bull doji, the moving average. That's not a good buy signal. So you're too close to that target. Hi, Ghost. How would you add nuances onto the spreadsheet? Not all high ones or wedges are the same. Yeah, I agree with that. I put thousands of trades onto these spreadsheets, and over time, I had 50 setups on there, and then it became 20, and then it's a little bit less than that now. But for me, I know what trade I'm taking. So if you sell 12, I'm selling a wedge top, selling a low 3 at the moving average. So I think it's more important to decide what it is, and then you just give it that code every time. Or, you know, if you bought 5, so 5, I'll either put as opening range breakout or just consecutive breakout bars. You know, buying below 7 is a weak reversal fade. What's that? WRF. WRF. Yeah, so I highlight strings of losers. I also have what's called the no setup. Yeah, so it's a real shame, but about 4% of my trades have no setup. And I would say I know a fair amount of price action. So if I can't work out what that setup is, that's a bad trade. Let me just double check what it currently is, just for full disclosure. I could sit here and say, oh yeah, it used to be lower, but it shouldn't be there at all. Okay, so 33 out of. That's a bit mean, Step. What's the win rate on the no setup trades? No, fair question. 3%. Here we go. Just let me. There you go. So 2.2% of trades, that's the proportion, and that's the hit rate, 3%. Whereas, you know, your classic breakout pullback, it's about 20% of my trading business, got a 65% hit rate. Beautiful, no problem. Don't think you need some ridiculous hit rate. That's a fifth of my trading business. And then what's this here? Breakout consecutive bars, another classic. Classic Al Brooks here. There you go, 20%, 65% hit rate. So find the setups that make sense. Luckily, someone's created a course for you to find them, and then you join the trade room and you see how all the presenters structure that trade. Yes, Steph, I'd love to send them to someone. The problem is at the time, because I fill it out, after I've done the trade, or if I'm in a swing, while I'm in it. So at that point, I realize, that's not a setup. Okay, so what do you do here? Well, we got to yesterday's low, which I think was a magnet. Outside bar, well, outside bars, pretty low probability, so about 10% of days are outside bars. Is 13, 14 enough for a second leg sideways to up? Yeah, I think so, but the question is from where? It might be from all the way down here. That's where you really want to be getting to. Always in long, first pullback, always in short, first pullback. So if you've done the course and you hear the presenters talking about always in long, always in short, if you can get really good at this, so you can see the proportion is less, but the hit rate's way higher. So am I going to trade the same size on these or a larger size? What do you reckon? So I think the spreadsheet is a real enabler for you to tweak your trading. That's right. And you'll be happy about doing it. Yeah, buying bar 7, buying below 7, so weak reversal. Yeah, so clearly always in long here. First pullback. Now, how do you buy that pullback? You can buy below, buy the close, buy above, buy into the range. You can come up with a style that makes sense for you. But for me, that's all the same trade. Here, I wouldn't say anything's always in until we get above. So any pullback now is an always in long first pullback, 25, 26. Always in short, first pullback, 57. So if this reverses, whatever. Always in long, first pullback, we go below a bar. And what you'll find is that it creates a layer of support and resistance. Not consecutive bars below the moving average, not consecutive. Consecutive probably here or here. You can, season to taste. Okay, so what do you do with 17? Well, it's a 50% pullback and a bull bar. So some bulls are looking at buying here and lower, betting we're going to get above those bear bars. It was a low chance for us to close this gap. So a lot of bears who sold either took a loss or sold more. Looks like they reversed yesterday's low. So 60-minute chart, we're in a bull channel and we had a breakout and follow through. 2 legs down. And it's a big down, big up. So we might be forming a trading range here. If the ceasefire is going to work, we're going to need a breakout and follow through above this high. Goji, do you trade Asian market? Yeah, I like Nikkei and Hang Seng. I don't trade Aussie too much, even though I am Aussie. Trading Asia gets you really good at trading range opens. So waiting for a couple of reversals, looking at breakout measured moves. But the price action's the same. A couple of nuances, like you have a lunch break. So consecutive bull bars 13, 14 above the moving average. So still always in long. It was a high one by 17. Some traders who didn't take 17 are seeing 18 and thinking, oh, I should have bought that. I think we're going higher. We've already done 1.5 times today's range. So I think there's limited upside above 16, but I wouldn't be short. $18 is a bull bar, so that's a bad sell signal. Will there be bulls below 18 or below 17? Triggering the high 1. Will the bulls get a high 2? I'm not convinced there's a lot of upside, but let's see if the bulls can get a high 2. So the red line is a 50% pullback, and the blue lines are the high 1. If you bought the close or you bought on a stop 1 tick above, I want to see what happens to those traders. Tried to break out once with his tail, so I think we're going to go back to 33.75. We need to come down lower first. The bear's trying twice to reverse. 16 was a good bear bar. Didn't go above it. Can they try again on 20? $60-minute chart, bull spike. 3 consecutive bull bars. 15-minute chart. Triggering a high 2, so possible scalp up to That breakout point again, what's that high? See if we get back to the 14 close. Yeah, someone's saying breakout mode. Yeah, we've got a triangle here. So you've got a high one buy. You've got a 50% pullback. Aykut's saying limit order market. Yeah, they're bears belling. If they sell somewhere here and sell higher, that's 13, 14 is not going to be the start of a big bull trend. And they've got the maths on their side. So II on the 15-minute chart, breakout mode, triangle. So likely to be a final flag. If we break above it, we'll probably come back to it. If we break below it, we'll probably come back to it. Not super similar. Similar to this, breakout sideways, high 2, and up in a channel for the rest of the session. It's looking for some at the moving average. So triggers, then we go above it, we're going to measure move up. Okay, so we're dipping into the lower third of bar 14. Will there be bulls buying here? I think we're in triangle. We've probably seen the high of the day or near to the high of the day. There was a high 117. There was a high 220 at bear bar. So it's not forming the trend continuation setup you want in a trend. Someone's asking monthly chart. This is a 20 bar moving EMA. This is an ETH chart. Oh, great, Tiffany. Yeah, always in long. Fantastic. Long 11, selling 14. Beautifully done. Coming up to the close of the second hour, I think very good chance this is going to be a bull bar on the 60-minute chart. On the overnight chart, we're right up the top of this range. A couple of legs down, and then so big down, big up. Some traders will be buying below things. They've probably done pretty well scalping all the way through there. So why did someone asked about FOMO. Why did my FOMO trades used to fail? Well, bar 14 is a buy signal for traders who didn't get long. They think 14 is a buy signal, but anyone that was long on any kind of position, they've got a runner, they see 14 is the end of their long trade. Thanks very much. So the reason me suddenly get FOMO and then decide, oh my gosh, I've got to get long here, and then not being able to manage it, not being able to sit through pullbacks, not knowing when to get out, is because you need new bulls to enter. So you could have bulls on the high 1, but so far that trade is break even. High 2 hasn't really triggered. Bulls buying below things. Let's see if they can get a bull bar for a proper high 2, 24. So it looks like traders buying the lower third, able to make 10 points. This was always in long, buy for a swing or scalp in the direction of a swing. Now looks like we're in a scalping environment. Coming up to the end of the second hour, so we've got a bull bar, so consecutive bull bars on the 60-minute chart. We've closed the gap to yesterday. and we're forming a triangle. So likely to be a final flag. II on the 15-minute chart might have III. Oh, I've definitely done that on no sound. Yep. That's great work, Timmy. Well done. Let's do that again, shall we? Good work. Good work. Okay. So inside bars are triangles. Inside, so it's breakout mode. No breakout above, no breakout below. What I was saying to nobody, because I was on mute, was that you often break out below and above and then come back to the apex. And this means that a lot of times you can ignore the first breakout and you'll get a breakout pullback entry, which is high probability. So let's get, this is the example where it does not come back to your entry. But to be fair, you've got an opening range breakout, consecutive bull bars, you know, you're not waiting for it to get down there. So triangle, that's the II, break out, come back, and second leg. So for me, I usually care about the second leg. So I'm not in a rush to trade the first one. Some traders will take both. That's pretty awesome. I mostly take the second one, or try to take the second one. And a really good drill. So, there's 4 of them. Breakout, pull back, second leg. So this piece to me is high probability. And it also happened here. Breakout, pull back, second leg. Probably difficult to make any money there, but that's the behavior I wanted to point out. So break out, pull back, second leg. So if we go below these bars on the 15-minute chart, we're probably coming back. So if you buy and buy lower, you're probably okay. If you buy to get back there, limit order trading. Did I re-enter? Well, I was long 5 and then long below 7, and then I was out at my targets waiting for an entry. I considered buying the close of 13, and in the 10 seconds it took to think through that, the market raced up 57 points. Then I was looking to buy below things. So I had an order below 18, I moved it, and I was trailing it below these bars and never got triggered. So I just got rid of that order and I'm just waiting. Some bulls that buy above these breakout mode patterns with bracket orders, they might be long above 24. Cheers, Liz. Have a great Easter weekend. Yeah, tight trading range, hard to do anything at the moment. You know, if we break below, we're probably coming back. If we break above, we're probably coming back. So 13, 14 spike, first pullback takes us to 17. So that's the low of the channel here, yesterday's low. I said earlier here, I don't think this is a good top, 15, 16. Usually need a second good sell signal. Not 19, not 20. Bears have not had another sell signal. It's more likely they're going to get it higher. And if they get it higher, we're in a bull channel. How small can this triangle become? We might just squeeze into the quantum realm, and then price action rose is going to cruise on in and take us into a new dimension. So if bears can break below 27, I think there'll be bulls there at the moving average. It's rising, bulls probably buying there a little bit lower. What would make them get out? A pair of very good looking bear bars. So far inside bar 28. Cheers, Lisa. Thanks, Hepraborn. That's it. Yeah, good to skip the bad trades. If you're not feeling it, that's fine. There's no. That's one of the advantages we have as a discretionary trader. I'm not an algo. I don't have to take every setup. So we spend a lot of time chatting through context and bulls and bears and always in and trading range and blah blah blah, all to try and give us an edge with context. Oh, that's nice. Yeah, it's a bit like golf. You can have a horrible day, but still absolutely enjoy it. Yeah, totally. We mate of mine's getting married. We had a Bucks Day in Sydney, so we had a big we had golf on Saturday up in Southern Highlands. Just magical. Obviously, the golf was horrendous, but mate, weather was great. Great fun. So someone asked about FOMO about 13, 14, and you might think to yourself, oh, Tim, I bet you wish you were long for this. But I've learned over time to be happy about what I've traded. I traded my plan. I traded the bear trap. We got a trap yesterday, and days often come in pairs. So that's why I spent so much time at the start of the session talking about a trap. And then I saw it, I traded it, I added on. So for me, that's well traded. If I try and measure myself about what I missed, I will always leave the session upset. I can control my entry, I can control my size, my risk, how I manage my trade. I can't control this. So traders that were buying below things, did they buy 10 points lower? Probably. To add bar count, you need a bar count indicator. Just add that in, you'll be right. So we're breaking out of an IIIE. Can the bears get a consecutive bear bar for a pullback and a second leg down? I'll get rid of some of these lines. So bull bar at the moving average. Will bulls want to buy this one? Looks like they bought the breakout of the extreme. I didn't like the sell 28 because it's a stop entry sell, but also it's at the same price as 16. But they were able to make a scalp. What they get? They got about 10 points. Can the bears get below 17 again? Can they get below 29? Can they get back to the 14 low? Can they close below the moving average? So we're coming up to another close on the 60-minute chart for the overnight. It's a bear inside bar, so it's a pause. So will we need to get back to the 18 close? Will we need to get back to the 18 close? Failed bear breakouts. Bulls are hoping to see a test of the 14 close. Maybe yesterday's close. What's working against them is that yesterday's not a good buy signal. Bull doji at the moving average in a bear trend. Well, that's 12 o'clock. So thanks very much, everyone. That's come to the end of my session. But don't go away because price action Rose is going to cruise on in and take you through to the end of the session. If you're wrapping it up, have a happy and safe Easter. We'll catch you next week. Now we'll be back we'll be back Tuesday in the Euro room. Just double check. Lots of breakout mode here, more limit order trading. Let's see, we've got, so Easter break tomorrow in the Euro room and the US room. It's a holiday in the Euro room on Monday, but Al and Rose will be back in the US room, and then I'll see you Euro next Tuesday. Cheers, everyone. Have a great rest of the session. Hope you found that valuable, and I'll catch you next week.
Good afternoon, everyone. Just quickly checking. Can you guys, give me a second. Can you hear me? Sound okay? And you're seeing my, I don't know how to close this. Okay, I guess I can keep it as is. I'm getting used to this new updated application. It's not easy to get around at the moment. Okay, I think that should do. Okay, so you can see the 5-minute chart and all the other hourly, Globex, and daily, weekly. Okay, all right. We got a bull flag here. We have 1, 2, 3 wedge bottom, 17, 29, and 32 lows. So we're testing yesterday's low as well. If we can find some buyers here, that'd be great. Pop out here now. Signal. Okay. I'm not ready to buy right now. Bears trapped every bull from above the bull bars, and every time I try to buy, I get in trouble. So I ended up buying lower and exited out. And this is where I stopped and start to sell bar 28. We could come down and test the bar 14 low. It's an outside bar, bunch of inside bars. So the first inside bar, we have a close below that with bar 16 closing below the first inside bar 15. We came down to the 50%, but we might end up testing 84.75 or 85. Is this too small for you guys? Can you see it? I think you can zoom in, by the way. Somebody actually found the question box and asked already. There's one question here. And I don't think Tim saw that. Maybe I don't know. And okay, I think we're going to come down and test bar 14 low, it seems. 85. But we're at the lower third of bar 14, so buyers are always here. But it would be nice if we can actually test the 14 open or low. Can we reverse back from here? Yeah, we could. We already have a wedge bottom. Bulls need to print a really good looking bull bar first, but the 93 ticks from below bar 15 is still the target. They're just right at the 50%. So I like to see it come down. If we start to get the bull bars, I'm gonna have to force the exit out of this short. Why are we taking bar 13 range? We're now taking bar 13 range, bar 14 I set. Bar 14 is the outside bar. Bears need to close below. Bears need to, Sam, I think it's best that you study bonus video 15 and 16 in the course, then you'll understand why. So bears need to close below the low of yesterday to continue to come down. But another one failed, 29, 32, 31 failed right there. So now either bears close a bear body here, and then we come down and test the 14 low and reach that target, or we're only gonna allow bears to scalp how far of the inside bar, very first one. And then we're gonna go right back up to the high of bar 14, or the upper third, or the high. So this is where they're gonna decide what to do. And I'm not making any dime from this trade anymore. And a sign of a bull bar, I will exit out. Because it's an inside a large range trading. So it's a trading range trading basically. They're buyers at the lower third of bar 14. All right, let's see. We can come down. All we need is a bear bar here. There you go. Let's go, bears. Come on, print that bar. And I will be looking for like that green line. See if we can come down and test it, but I really need a bear close here with bar 34. Failure to close a bear bar. Bulls can come in very quickly. Next bar could be bullish, but I'm just waiting for the bar to close. Okay, here we go. Good job. Let's go. 84.75. There we go. That's great. Okay, I'm still looking for this target right here, 84.75. I would wrap it up at 85. It might even, yeah, we're definitely gonna test it now. Excellent. I just added another contract. I just want it to come down more. Come on, don't go up. It's almost there. I hate it when they do that. Richard, if you're listening, I don't know why you're up this hour, but since you're here, is the question box the one with, is it the same as what I'm seeing here? Is it one with the question mark on it? It's a speech bubble. It's almost like a bubble, but it's a rectangle, and there's a question mark on it. So yeah, that's it. Yeah, I can see it. I was just asking if the attendees see the exact same. It should be the same interface design anyway. So there's nothing we could do, guys. We had to upgrade, and we're gonna have to use this version. So you guys need to click around a little bit. So this must be the browser version you guys are using. Maybe the app, I don't know. Click on those horizontal and vertical 3 dots and see if you can, because that icon is not on this window. So click on those vertical ones, and I'm sure there's some kind of the little three dots on the top right-hand corner. All right, so it's a bummer, but bears sold below 34. They probably want the target anyway, so I would be careful buying this bar right here. I don't think presenters can tell you how many contracts you should be selling, what you should be scalping, and how much you should be leaving the runner. We cannot make that recommendation, because we don't know what everybody's risk tolerance is and how you're trading and all that. So a question like that, I see that you're asking a lot. We can't answer it. So I'm sorry, but I'm not going to be any help there. So you're going to have to figure that out. Because your risk tolerance could be a lot higher than me or somebody else. So, and you don't have to scalp. You can simply open a trade and hold it for 2 hours. You can move your stop instead. Still waiting for bears to thoroughly test the bar 14 low. Don't like bar, what is it, 35 as a good buy signal, but we could have a 3-bar reversal here if bar 36 closes on its side and strong bullish bar somewhere up above the 35 high. That could turn into a reversal pattern going right back to the moving average, but I don't know how 36 is going to close for now. There's still room to downside. The bears can still sell, but the bar closes bullish, we could end up getting some kind of a reversal pattern. But I also don't want to buy against 1, 2, 3, 4, 5 consecutive bear bars here. Any good looking bull bar, bears will start to exit from above that bar, and so you have to also think of, should I wrap this trade up because this is a bull flag possibly, and bulls are trying to get back to the bar 29 body area above the moving average. But you need to wait for bar to close to make that determination. Otherwise, that 1-hour target is still valid. How do you increase your risk tolerance? You have to have a large account, right? So you grow your account, right? So that means whatever that 1% or 2% of your account, what you're risking, that number grows. Or you can have maybe swing trades with wide stops. I think the swing trading creates that calmness and happiness because you get to trail your stop, and you stay in the trade long term. Scalping is difficult, stressful, and you have to be 80%, 70%, 80% of the time right. And so you better be reading that price action pretty good. You got to be bulletproof. Scalping is not easy, All right, so bar 36 did not close all that great. In fact, it's closed below its midpoint. So to me, this is a bear flag right here still. And they still have the target below. Now, they need to close bar 37 bearish, preferably below the close of 34 to continue to sell further down. So we might instead get the third bull bar. That would be 3 inside bar up, and then bears could sell. If this bar closes bullish, bears will sell anyway at the upper third of bar 34. But if it closes bearish, then it's just going to sell anyway. So I'm still holding for that first green line. We'll still try to get the multi-bar reversal pattern, trying to compensate what the bar 36 failed to do. They're trying to close above the open of bear bar 34 to get above the moving average and start the bull flag and go back into the bull flag range up here. So that's what they're trying to do. But what about the bears still selling below 34? Now they're trapped and they're going to want to sell and bring price back down a little bit to exit out, because this bar is now pretty much scary, right? It's trying to get above, but the bears will sell quickly around here, and they're going to try to break even. But the bar closes bullish, you're going to have many bears start to exit because they're trying to get back into, market's trying to get back into here, and that's the bull flag and really strong bull bar. Even though the bears will probably going to sell to break even first, bulls might still come back in because this is now doing a lot of damage. Okay, so I'm done, exited already. It's supposed to be a smaller bar, but it's now accelerating up, so I'm not going to sit there and try to fix anything. But bears will sell from the high of 34 area. And they will want price to come down and test the open of 34 once again to, I don't know if they can minimize. I'm sure they end up loading a lot, but this bar, selling against this bar is difficult. But I generally, when something like this happens and the bears are trapped under a strong bear bar like that, I start to sell from above that bar to, I wait patiently, and then I try to exit out quickly. Like I either look for bar to come down to the 34 open, or the high of 36, 35, bar 35 or 36 area, and then I just exit out. I'm trying to come in here probably. It's a strong bar. It closed above its midpoint. Yes, it's got an upper wick, but it is a very strong bar, and it's kind of forcing bears out the door. But these bears still need to break even. They really need, they want the open of 34. So let's see if they can get that. There you go. Just tested that. Can it come down more? I don't know. I wouldn't expect it because this bar is pretty strong. Now, inside up failure means, like if you have, this bar was actually small like this, okay? And then I would look for a bear bar. But what this bar did, 37, took out this now, and this is now more bullish, okay? And if this bar now closes 38 bullish, right, we're not going to come down any further. We're just going to become bullish. But oh, all right, see, it came down to the 36 as well. 36 high, 35 high. So these bears are now getting a break even. And let me explain how you would actually find your actual break even. So, okay, so you have 3 bars that make up the bear flag, which failed to sell, right? So you see that this is the first price area that I would put a sell order, expect at least that, and then, but this is what you should be getting. And then what happens is, if you are a bear sold underneath 34, sell right there, this right here becomes your break even. And look, it actually exceeded all the way down. So these bears sold below 34, sold up there, actually saved the day. Now, how does this come down more, right? This was supposed to be bar 37, supposed to be a small bar, and the next bar is supposed to be a bear bar. right? Now, to compensate that, bears need to close this bar way underneath this midpoint, or there's average break even price, and then come all the way down here. It would be even better if they can come closer to this area. Then they can compensate and keep selling. They want the 34 low. So they can still show up. And that's why I said we need to pull back before we go up. So we need to wait for bulls to figure out, I'm sorry, bears to figure out how to break even. But the one problem for bears to sell, it's this bar, 37, taking out a very strong bear bars open that actually closed very, very low. So that's a very strong bear bar. They took out the high. They only took out the open, not the high. The body did not close above. So I expect this pullback, but then I like to see bulls come in. Now, bulls won't come in if you see this bear bar 38 take out bar 37 open and low. If they close a bear bar around here, that's done. So bulls should not allow bears do that because now they're stuck. Okay. But you could see how break even was not full break even. If anyone sold a close of 34 or low of 34, what market did was brought the price very close to it, but not exactly where they sold. So to me, that's like saving the day pretty nicely. And that's why I don't buy as soon as I see a bar like this. I always expect it to come down, give the bears a chance to exit out. And that's what's happening here. So what about our target? Can we still get down to that? Yes, we can still get down to that. But what do I need here? I need bears to come down and close around first minimum 91.75 and then below 34 close, then we'll quickly come down and test this target that we were supposed to test anyway. So I like to see some things happening before I give up on strong side, which was the bear side. And they're disappointed they didn't get there. I mean, this is the inside bar's projected target down, right? So within the range. So if that's disappointing to bears, they're also not going to let go very quickly. They have to fix it. So I'm watching this bar 38 when it's going to close. And if it closes the way I want, meaning very bearish somehow, no, it's not. So I don't really like this for bears, especially now we get a bull bar. We're gonna, there you go. So you needed to exit with the 38. Now the bulls came in. Well, if you were to put a buy order above 38 and you would just go right up, and your target would be failed flag range breakout. That would be the first target, and then you would leave a runner for half R and then 2R. But I would take profit there first because there are always some sell orders there. The bulls are going to take profit. Now it overshot because the ATR is huge. The distance from here to here is only 8, almost 9 points versus ATR is 5 more or 6 more points higher, right? Larger. So that means, right, it goes up to 13, see, 1350, just about. Yeah, 1325. You see how it adds up? That's why you don't expect this to be tested right away. This is where you scalp out. Anything more is just the excess point coming from the ATR. But anyway, so I want to show you why it goes there. What do you mean 186.93? Oh, what's going on here? Hang on, everyone. What is going on here? Okay, I'm gonna have to. My computer is completely. Can you guys? What is going on here? All right, I'm gonna put myself on mute because I need to get out and come back in. Something's happening with my computer, so give me a second, please.
Hi guys, this is Richard. I'm just testing and messing around with the settings. Can you hear me while Rose is away? Okay, that's pretty good. Yeah. And on this new system, we can add cameras so we can get more than 1 or even 6 people on at the same time on camera as well as the screen. So if you can hear me, Rose, I've sent a message on the group channel Discord explaining how the settings are for allowing attendees to ask questions. So I can't show my screen because for some reason, although Rose can show a NinjaTrader screen, I can't because I'm back on the browser version. If I was on the desktop version, I could show the desktop, I guess, the NinjaTrader. But I'll be going to bed soon, so just hello everybody, Mako, Ninja T, Nissi, well, quite a lot of people here. I must say this new system is infinitely better than the old system, so let's hope we can make good use of it in the upcoming near future. Hi Bieber, hi Immatrix out, Cookie, Peter Rabbit. Yeah, the question icon was not being enabled, so there are so many settings on this new system. It's going to take time for all of us to work it all out. Now here's Rose come back in, so I'm going to shut up now. Thank you, Rose, and I'll step back. Yesterday's video, Ken's got problems with it. There's a big problem that is about sorted it out, and it's a way that the new system saves the file. So it's a different process, and it'll be with us tomorrow, hopefully. So I think that's going to be the final problem with this system. Okay. Are you there, Rose? Are you coming back in? Because I'm going to exit now. Bye, everybody. Good night. Hello, Rose. Are you there? I've come back in. I just wanted to say a quick update to everybody on the workshop for Orlando. I'm still having problems getting the hotel fixed, but we're nearly there. Looking at Macau, but there's a small chance we might be going to Hong Kong, which is my home base here, Hong Kong, due to the dates problem. But we're still looking at June 21 to 24, or if that fails, it'll be June 28 to July 1. But it's going ahead, and fingers crossed it'll be sorted out next week. We should have confirmation next week. So thanks again, everybody. And hello, Rose, are you there? Yeah, you can bunk at my place. I've been told that most people like to use Airbnb, but we need to fill a few hotel rooms. Otherwise, we'll be losing money. So fingers crossed we can get enough people into the hotel. It'll either be the Macau, the Grand Lisboa Palace in Macau, which is a massive place, or it'll be the Hopewell Hotel in Hong Kong. Yes, I'm from the UK, England originally, but I've been in Hong Kong now for several decades, so Hong Kong is my home. Yeah, Macau's a nice place, very relaxing.
Okay, I'm in.
Hello, Rose. Thank you. I shall leave you to run the rest of the session, Rose.
What are you going to do? I'm sorry, say it again.
No, I don't know if you've been. I've been talking to the crowd. I've been testing the microphone here to make,
I'm glad.
make sure it works, and I've enabled the questions for people on the attendee. Check on the.
Oh, excellent. Okay, great. Yeah, my computer has been crashing last 2 days since the upgrade. So something's interfering, and only my laptop the laptop window, just the screen goes complete blank, and I can't control anything. So I have to hard reset the whole thing. I don't know why it's happening, but I need to figure it out. So I am back in and ready to share my screen.
I'm going to go. Thanks, Rose, and talk to you later. Bye-bye.
Thank you.
Thanks, everyone.
Let me share my screen, everybody. So give me a second. All right, that should do. All right. Okay. So bulls took over there, and I'll make this larger so you guys can see it. So this is now a bull flag. Okay. And I need to buy this. Looking to buy it, but I want to see this bar close bullish. This is the second leg up. Okay. I put a buy order above bar 40. This computer is new. I bought it. It's just about a year old, but something's, I don't know what's wrong with it. It's supposed to be really top-notch laptop, but yeah, that's the same for if someone said if the date range is set to a long time in a short time frame, it makes things crashy, at least on TradeStation. It's actually the same on TradingView. I'm sorry, not TradingView, NinjaTrader as well. And we are told to keep it either a couple of bars or a couple of days. I don't know. Some people say that's ridiculous. I can load hundreds of days and I never crash. You can see right here, I only have 20 days, right? So I'll make it like 12, doesn't matter. And all of the other charts are also pretty, like I'm only loading maybe 3 days, 5 days tops, that's all. So I don't know why this is happening. Could be something to do with the graphic card, could be something to do with the Windows updates. Windows updates, if they're behind, it affects the NinjaTrader performance big time. And the problem here is that every day I do the update manually, but it only updates one script, which is the antivirus, and that's it. It doesn't do anything else. So there's got to be something else I can do to update. I'm sure there are tons of patches that needs to be done. I just don't know how to do that. So I'm not a Windows person. I hate Windows. It's just cumbersome and garbage, really. I've never had any problems with Mac in my life, but I cannot use NinjaTrader on Mac. I have to have Parallel to do that. So all they're saying to me, oh, you need a hard reset, or you have to delete everything and have a new Ninja install. I've done it a zillion times. It makes no difference whatsoever. It's something to do with the PC, something to do with the Windows, and just doesn't make any sense. It's just a runaround, they say to everyone. And then you end up spending your entire weekend trying to reload everything and create your workspace for nothing, basically. All right, so I'm looking for bulls to show up here, but I need bull close. Another small flag here. Yeah, Windows 10 was a lot more stable, definitely. I'm going to try to fix it this weekend with somebody else. The offer has been offering me. See if we can make some improvements, but I'd be happy to take your offer too, Hepperborn. So at this point, I'm just going to mail this computer. Here, take it. Do something with it. Otherwise, I'm going to take it to backyard, and it's the office space style. Start jumping on it. You guys remember that office space? They took a bunch of printers to the backfield. I mean, NinjaTrader is not bad. It's actually a great application. It's just that Windows is the problem. in my opinion. I think it's something, it could be something loose, graphic card. Why is my entire laptop screen monitor is going black, like complete black? Everything's running in the background, but I can't see anything to click around. I can't even turn it off, so I have to like hard, hit the on-off button to turn it off. It's really annoying. And this is new. It just started 2 days ago. So what's going on here? Well, we do have a wedge bottom. It's a bull flag. Was bar 38 is the higher low? Maybe, but I think we're going to have a much better higher low here if we're going to go higher. So I'm just waiting for bulls bought here into the second leg from above 38 or the close of 38. You can see it's clearly a bull flag. They're not getting any traction due to bar 28. We're going to get more bullish if the bulls can close above bar 28. Then we would go and test the bar 16 open and high. So we either do it now or this is going to totally reverse back down, and the bull flags can fail. Okay. We can end up coming all the way down to 34 low and start to close bear bars. Then we would have a much proportioned, okay, leg down. So 1, 2, and 3. Then we would just start to go up. So if this isn't good enough for bulls counting as legs, then we might end up coming down to here once again, maybe even lower, but that still can be a bull flag. We can test the 14 low, and that channel can come all the way down to the 14 low and still be able to reverse back up. So it's there's got to be some buyers somewhere here. The 98.50 area. $98.50 and maybe a little lower. Bulls are stuck up there. If they bought above 40 and they are stuck, so they're going to have to buy again here and break even. But this can come all the way down. Bears were supposed to be reaching, okay, 39 ticks from below bar 15 low. So, but now the bulls are stuck up here, so they need to buy around here and get a bounce and get a break even. We might need to pull back up to these low of 41. If we can get anybody buying around here, I need to pull back to low of 41 area. If this bar closes bearish, I mean, bears want to sell more. They want to come down to the 65.93, want to test this 38 lows, but there's stuck bulls there, and we need to pull this up a little bit towards the 41 low to give them some kind of break even. So I am looking for buyers here from below bar 39 or breakout point 36 high, somewhere around there. So there were buyers there. They did buy, and looking for bulls to get that break even. There you go. And see if we can come closer to the low of bar 41. That's what I'm kind of looking for. I was long. I did say I had a buy order above 40, but disappointed. So I ended up buying. So I look for these micro support resistance area, and there you go. So I put a buy order. It happened to be right around the open and low of this breakout bull bar 39, and I got my break even. And that was pretty fast anyway. So we are testing the 41 low. This is good for the bulls, but only if they close the bar as bullish as possible somewhere up near the open of 42. then we would continue. That's the kind of higher low I'm looking for, but with a much better bull bar, okay, stronger bar. So will bar 43 be that bar for us? So we can buy and go and test the 28 high and 16 open, so and so. We could, but I just need the bar to close the way I want it, and then I might even hop back in again. But right now I'm in a break-even mode, and that's what I'm committed to, and that's what I did. So right now I'm flat, Gene. I did say I was going to buy above 40 and got immediately trapped there. And so that's second pullback. Actually, yep. So I still want the third leg up, but I don't know if I'm going to get it. So when I see a bar like 42, that could turn into a bear flag, and bar like 42 will want another leg down. I don't want to be like stuck in it, you know, hoping that the bulls will buy. So I step aside and just wait for better conditions. And that is the high 2 from above 40, second entry long from above 43. Bulls will try to buy there, one tick above, but 42 is the problem. How to know? Well, it's right there in front of you, right? So you can see there's a breakout and then comes back, but could not close a bear bar below that breakout, and then gets another breakout bar. So when the price gets here, it's strong enough to bounce. And if you're bought here and you're stuck, buying there will give you a break even. You can find those levels. Like for example, say you have a support there, right? So and well, that's not a good example, but let's do this here. There's this one better. So you have breakout bar 28, right? Bunch of bars here, breakout bar 28, and maybe you're long there, and then you see bar 28. Okay, that's not good. So I want to buy. Where's this? Where's the support? Where's the nearest support? And right here, there's a support right there, right? Look at the bars coming down, keep testing. So if I actually put a buy order right here, say you're long right there, okay, and then you buy right in that support 66.05. Look, that bar is going to give you break even, and then you exit because you don't want to go against 28. 42 is like 28. Okay. Or is you don't need any of that. Say you bought maybe like 1, 2 failed above. You're buying above a bear bar and you're failing, thinking that this is high 1, that's high 2. But bears need to sell twice. But say you did buy. I don't like to buy above bear bars, but say you did buy right here, 66.17. Look left, find a decent, good-looking bull bar, okay? Somewhere around the midpoint to lower third, put a buy order there, or buy order at the open, okay? One of which is gonna get you into the trade, right? Which is either bar 23 and 24, and you're gonna get a break even where you look, market goes right there. Even gives you a little bit more than what you bargained for. You get your break even by entering above 20, it gets there and then gives you even more points to scalp. So that's in the scalping videos. You need to go there and you need to study those. Maybe this weekend would be a great timing if you get tired of egg hunting. And same goes for bears. So if you are a bear, you sold there and you know you're selling late, and suddenly you're stuck. What are you going to do? Look left, fine, good looking is bear bars closing on their lows, maybe with upper wicks or stronger bars like that. So I would start, you see there are a bunch of wicks there. I would put sell orders. Somewhere inside here, I would put a bunch of sell orders, okay? And then I would get filled, and as it comes down, right, this is your first price, this is your second price. Somewhere here, you get a break even. That's your third price, average price, for you to exit out because you sold here originally. Again, it's all in the course. It'll make sense, and then you're always going to be able to fix your trade. Might be failing right there, and now I can look to buy. But what about the bears sold from below 44, trapped, right? They thought that was the second entry short for them. They will sell from above 42 to break even again. But I like to see now 66.12 and further up 66.15 and 3/4 test it. So we could accelerate up at least 66.12 test. So there's a quick scalp there I want. I did buy, and looking for 66.12 test. It's probably going to go slightly above that, but I like to see it test it. Might actually test 12.50 or 13.50. What about the bears? Like I said, those bears will try to sell because they are trapped from below 44. So they're selling from above 42 to break even, okay? And I would not sell until we reach the 66.12 or 12.50 first, and then bears might sell and we could come down a little bit lower back to the moving average or the midpoint of 42. Right now I'm long. I see the trap and I bought it, and I'm looking for quick scalp and see if I could get it even higher towards the bar 28 open. Here we go. Excellent work. Did you guys see how that happened? Quickly. You want me to explain it again? I think the third leg down was here. Leg 1 pulled back, leg 2 pulled back, leg 3, even divided into 2, and bulls 2 and third leg up. So it's a bull flag. First bear flag failed, and second one failed. I bought into that. I got more than what I bargained for. So I went actually for 13.50 and I got it. Could go up even higher, but that's where bears started to sell. They want at least the open of 42 tested again. Can it come down a lot more and test the 44 high? Yes. And that's probably what the bears want. I'm going to need a quick, it's gotten super cold in here, and even my cat is very cold. I can feel her little paws are like ice cubes. So I'm going to turn the heat on and give her a little bit of food, and I'll be right back, everyone. All right, now you should be hearing me. For some reason, application shut itself down. I don't know why, but here it is. You should be able to see everything now. All right. I just went in there to feed the cat, and then I just realized, oh, there's no food here. And she's pointing her cup that is empty. And I looked around and there's no cat food. Oh no, what do we do, Apple? So, and I'm hungry too. So I found the canned sardines, and I said, well, you're gonna have some of this. And she loved it. It's the first time she's trying out. She loved it. Now just looking for more. So I just made myself a lunch too. Looks like I got filled some more there. But strong bar 48. We need to close the bull bar above that. Bulls are not doing all that great. And this happens when the flag channel lasts more than 20 bars. Okay. And think about 15 all the way to 36 and still lasting. So it puts us in a tight trading range area, and it becomes a little bit difficult to get a breakout for bulls as we add more bars every step of the way, and just kind of, it's becoming a breakout mode, but more bars that are added, especially around like 40 bars sideways trading range, it's a 50-50. It can break out to upside, break out to downside. It makes it very difficult for bulls. Okay. So the bulls still need to take out the 28 high, 16 high to get a test of bar 14 high. That's what they want. They want to test the bar 14 high. So they got to do a lot of work here now. But what about reversing back down? Yeah, it could happen. It is now 1:30 p.m. If we start to get 4 consecutive bars or 4 bars down and then continue to close more bars after the 6th bar, I will know whether or not we're going to get a breakout to the downside. So no, this was not, you can use it, but Adamski, your setup should be from the lows, not from in the middle. Okay. So you can see this is the setup. We got a 1 hour pull back. Bulls are buying. They want the 2 hour. So we need to close more bull bars to continue up to the 2 hour target up above. We are above the 1 hour, so we should be able to get up there. So if someone's asking if you are trading, maybe this is the whole range, right? And bears are closing below that green line. So that means they're going to come down towards here. Here, let me put the levels. So if they're closing below, they're going to come down to the 33%, and then they want to get down to here. Okay, fine. But what's going on here, right? We keep coming down to the 33, going back up, not closing above. So that means we're not going to go up here. Coming back to the 33, finally broke below it, and bears selling into 50% is pullback. Disappointed. So they sell again. They want market to come down here. The reason why we're not getting above this green line to go further up high, that's because there's unfinished business here. These bears are still stuck from below 34. It's probably sold 28, and they wanted this. And if we start to close now below 33% with bar 50, we're going to end up swinging down to here. So think about your stop. Where would your stop go? Somewhere either here or higher, right? Because once the bulls start to close above this green line, you don't want to have a stop somewhere up here. Price will want to get back up to this area. So you're going to let it come to your stop and turn your entire PNL red. So you want your stop somewhere above those highs. And then you could just literally put it right here, because if you're wrong, you're wrong. You want to get out as quickly as possible before it turns bullish. So in order for us to get down to here, we need to close bear body below 66.0175 area. And in order to go higher, we need to close above this green line, 66.1750. I believe you only have 2 legs here. I wouldn't count 38 because it really didn't take out the prior bar's low. So this whole thing from 35 low all the way to 39 high is first leg pullback, second leg pullback, we need to have another leg up. But 3 bear bars, I'm kind of hesitating buying above bar 50. So if bar 51 goes down and closes near bar 50, bears can continue to come down. I'd rather to buy with bull bars. I don't like to, especially 2 consecutive bars that are closing on their lows. You buy above 50, they're going to trap you. And that is not good. So I want to see bulls are not getting trapped. And I want to see we're able to take out good looking bear bars like 49. Then I'll look to buy. And assume that the third leg started and it's going to want to extend higher. Three bear bars. Third one is not all that great, but still that's sideways and down price action expected. So where's your micro support that you can buy? If you did buy and you're stuck, it would be right here, right? Somewhere here, around right there. So there are a ton of buy orders here. That's where we're going to test. And then we're going to bounce, and anyone bought above probably going to get a break even with that bounce. So let's see if they can actually buy there. And if it cuts through it, where's the next one, right? So you have to have a contingency plan right there. So somewhere here to here, this area is a buy zone. And sideways, down, can get a second more leg, but the buyers would buy because they already bought above 50, but it was a bear bar and they got stuck. So I won't buy unless I see a bull bar taking out some good bear bars. Okay, you can't buy because if I do, it could quickly come down to these lows and I don't want to be stuck in it. Especially 98.75. It could test 98.75, 98.50. Bulls want to go higher and test the 14 high, but I would love to buy with them. I just need to see good looking bull bars. Bar 51 is the second leg down for bears. Not a strong one. Again, there's no bull bar. I don't want to buy. So this is a form of another bear flag here, small. And a bunch of dojis. I think we're going to have to come down more to that micro support area. My only problem is we have a wedge here, 1, 2, 3, bear flag possible. Okay, bears want to come down and test. We might need to make a double bottom here before we go up. So that's why I said I don't want to buy. It might want to come down to the 98.75 area. $98.50 to be exact. There you go. It's coming into the support area, 2 support areas. I said we might need to test there before we do anything. So I did sell, and I'm going to scalp around 98.75, 50 area and see if we can get a bounce there. I sold underneath 51. I wanted to sell above 50, but I was too late talking. So I just put a sell order underneath 51. Not the best sell, but figured it's going to come down to my target anyway. So there we go. Close. Okay, that was not bad. It was a good trade. It's even coming down more. So there you go. So now, if we close this bar bearish, okay, we can end up coming down all the way to here, 65.80, and that's what I'm worried about. So this bar closed bearish. There will be some buyers here because they are stuck probably somewhere. And there's a measure from all the way to here. This whole area is a buy zone, right? So what am I seeing there? I'm seeing micro support. I'm seeing micro support. I'm seeing micro support. So these are where the buyers are. Okay. But this is now wedge bear flag, and it's trying to come down to these lows. But we should get some buyers. If we don't, that bar is becoming a very strong leg here. It's trying to get down to the 34 because that's where the sellers got stuck. But we should get some buyers, because if you are a bull and you bought above 50, and where's that? Like maybe right around here, you buy again, or you bought already with bunch of orders. I mean, your average break even is right there, right? You already entered, so you're going to actually break even a lot lower. Anyone stuck up there, I said they need to buy, but they might need to wait for price to come into this area, okay? And then you would expect a pullback. See if they can actually tag that. What if it closes below this zone? And okay, I measured from there because that's the last micro support area, assuming you get fill there, and as soon as this bar closes in 34 seconds, right? Even if it breaches, that's fine. Bulls will buy, and it should get to that light gray line or there. If bulls bought with multiple contracts in here, they're going to get a break even a lot faster. They don't need to wait for this average break even. And if it keeps going down, and it could, okay, then they will buy down here. 50% pullback of today's entire range. So we should get some buyers here, at least get us up to 97.50 or 6,600 and quarter, or 6,600. Really strong bar 52, but stock traders above, they've been scaling in lower in this area. They want a relief and minimum early bird special exit at 97 and a quarter, which is right there. It should tag it. It's only fair. They probably already bought with multiple contracts. And so I call that an early bird. You exit out before waiting for average break even to be tested. And others will buy a good looking bull bar, but they have to wait. Say that bar closes like that, they're going to buy that, then their break even will be that line right here, 0225. Okay. And that's with stop orders. Limit order bulls is both at the very last micro support. So they want this right here, 6,600. We should get that. But just because I said we should get that, we don't have to, but that's how I calculate it. And the problem here is the 52 is way too large, okay? But we did test the average, I mean the secondary average, let's call it, right? Early bird special. But the bar is still young. There's still 3 minutes and 15 seconds. So let's give the bulls a chance to. What if the bar closes bearish? Then we get continuation down, and then those bears will be scaling in even lower. That's why, look, market's going sideways. Bull flag is failing. 3 legs up, maybe. Maybe they counted this as a pullback. That's a deep pullback, but didn't take out that bar's low. So then second leg, then third leg. I said it is possible that we could get the third leg here. This would be the first leg, second leg, and third leg. but where are the bulls? Once I see those bulls are not coming, and I'm thinking, all right, so we're definitely going to come down here. So why don't I sell? I don't want to buy above 50 because that's 3 consecutive bear bars. That's sideways and down price action. I'd rather to go with the bears. Okay. And I did sell, made money, but stepped aside. So because I know bulls need to buy and get a relief, and market can go up to 99.75 or 6,600. And since it's a trading range, I'd rather to take my profit and step aside. I just explained that. Hopefully that made sense. Nimbo, New York MB. I don't know what all that means. I'm just not going to say the last syllable. Interesting, very creative names. That's Al's rule. Al always says, I don't like to buy above bear bars. I don't like to sell below bull bars. When he's counting bars, high ones and high twos, for a high two, he just doesn't like to enter there. And I've heard him countless times, kind of stuck with me. And every time I get stuck, I'm like, well, Al did say that many times that I'm not listening to him. So at some point you stop doing that mistake. But we'll still want is this right here, average break even. I'm still waiting for them to get what they need. Early bird special tested, nice. So now 1-to-1 buyers. All right, that's great. So we should test that right now. But it can actually go higher. Now, see, we're there. Retail traders are buying above that bar. Their break even is right up here. So we could even go there. But I would measure from the close of the bar, 53. And now the break even is 0275. So now I have to wait for that and see if we can get there. But now that you can see those micro support resistance, right? You should be able to see them. Now you know you don't have to wait for those break evens. You don't have to wait for that retail bar. You can simply buy at those micro support levels and enter early and exit out if you're stuck somewhere up here. Yes, we talked about that double bottom. And I said, we might, because we're going sideways, more than 40 bars, breakout is now 50-50, 50% to the upside, 50% to the downside for this black bull flag. So I said, maybe we need to come down here and make a double bottom. But I also said, okay, I'm going to remove this because just too much going on here. Bulls need to test the low of 51 to get a break even, the retail bulls. But take a look at here. I also said market can bring price all the way down to the 50% pullback and make a much better wedge bottom. 1, 2, 3. We quickly break it, and then bulls start to buy. And then we start to go right up again. I would love that kind of a price action. It would be super fast. But right now we're in a bear swing. Okay, let's talk about that. I did actually, but I don't know if you guys remember what I said. 1:30 p.m. we could get some kind of a swing, and it's already set up with a really nice sell signal bar. So bar 1, 2, 3, 4, 5. That's the 6th bar. I don't want to see bull bar closing above 52. We can have a wick, but I want bears to close down here. That means I can keep selling, this time looking for a 12 to 16 bars minimum swing down. Okay, I would like this swing, I call it a half trend, 6 bars, continue for an hour, complete by default 12 to 16 bars. So what I need now, bear bars closing below 53 low. It could still go sideways and sell too, and that's okay. I just need to see a 12 to 16 bar. So 1, 2, 3, 4, 5, 6. This is the 7th bar. What I don't want to see is a bull bar closing above the 6th bars open and close and high, which is bull bar 53. So I'm looking for follow through here. and it's a bear flag. It's trying to become an implied flag with 3 bars. So all they need to do now, close this bar 54 below the open of 53 to sell. Bulls still, retail bulls did not get their break even yet. They still want 51 low tested. And we might need to get, if this isn't going to be implied bear flag, then we're going to get 2 pushes up before coming down. And that means we would give those retail bears a chance to exit underneath 51. Okay. If bar 54 won't close bearish enough to sell, that's what you're going to end up getting. So we're still trying here. Okay, those retail bears actually almost, they didn't really tag the low. They needed to tag 0275 to break even. They haven't done that yet. So I like it to go up there to 0275. Could go up a little bit higher to the upper third of 52 and look for sellers. But we should test the 0275. How do we become bullish? Bar 52 is your ATR bar. If this is a failed bear flag, okay, we could also go and test the open and high of 52. We get a bull breakout, we could go right up. And then the bears would sell higher. But right now, I want 0275 tested. Here we go. They just tested 0250, but not 0275, which is low of bar 51. Maybe have I not measured this correctly? No, I am correct. It needs to test 0275 minimum. Better if it actually goes 1 tick above. Kind of like a second leg up here for bulls. If bears still want to sell and test the low of 52, but bulls didn't get a chance to fully get an average break even here if they bought above 50 bar 50. So we should get that. It's just taking its time. Come on. You might even go higher. If bulls want finally go back up to 66.15 area, they're going to have to close above the open of this 52 bar 52. So these poor bulls, retail bulls, they're still struggling, but they will get their break even. It always works out. It's only fair. Machines know that's how it works. The order of things need to be done before bears take over again, if they can. But what about the swing bears? Well, they moved the market half hour down, okay? But they know if the bulls start to close bull bars above the 6th bar, which is bar 53 bull bar, then that's it. The swing no more, okay? That will become a half trend and it won't become a full trend. The selling that lasts about hour and a half. So that means they're gonna start to exit these bears from above if this bull bar starts to close bullish, because then they know they're going to be in major trouble and they're going to be bulls are going to be going above bar 52. It's only fair, and I mean fair is fair, right? How did I decide that this is fair? Well, I've traded this so many times. I kind of already know what works, what doesn't work. And it's because L talks about these retail bars, okay? So bar 53 is your retail bar that all the bears were looking for. I'm sorry, all the bulls were looking for. So they bought it. Now they're getting full break even. Look at that. If that bar now closes above 52, we're going to go a lot higher. and here are going to be your targets. That's your ATR bar. You know what to do. You measure only the candle body, exclude the wicks of bar 52. Apply your 1/3, I call it the 1/3, okay, breakout levels. So I just got to make sure that you are measuring it correctly. So now we get a bull bar close above that 100%. We're going to go up to 66.12 and then further up to 66.17. Then these bears will start to sell. Okay, they're going to scale in higher. But what if we don't close a bull bar? Then we can come down. That would be inside up failure, bunch of bull bars, not able to take out the bear bar 52. Then we can come back to the 50% right here, maybe even all the way down. But right now, if this bull bar closes up there, done. But right now, look what happened. 50 is where you entered and got stuck. Market ended up giving you a full break even cover your commissions with extra couple of ticks. So when bulls see that they're able to get back to where they got stuck, they want more. They're like, wait a minute, we moved the market so up high, now we're completely eliminating this bear bar 52. Who's going to stop us if we close a bull bar above 100% level? Okay, then sky's the limit. They're going to end up going to 133, 166, even one time the measured move of bar 52 candle. It could go up here. It could even go all the way up here. That's how you know flag is going up. So what do I do here? Just wait to see where that bar is going to close before you exit out of this long. You're getting more than what you bargained for. You went for a break even. Market gave you a full break even. Okay. This was 80%. This was 60%. Now, in order for 60% to become a full breakout, okay, for bulls, that bar needs to close right around there. So when I'm breaking even, I'm committed to break even. I don't mind getting back in, going long, but if you're still holding, so now you're disappointed. Why is this coming down? Because bears are trying to prevent the breakout. So I don't know what's going to happen in 1 minute and 55 seconds. If the bulls get that breakout bar closing above 07.25, then they're going to want more. If I'm committed to break even, I will break even. I will break even here. And if I see bar closes bullish, I want to exit. Then I want my full break even. But you have to somehow also think about, what if they trap me here? Well, you'll know. In 1 minute and 26 seconds, you will know. Okay, so 56 did not close above the 07.25, but it also did not close bearish. Okay, so I can't really put a sell order underneath 56. Bulls probably want the breakout now. So, and they might get it. So bulls now want 66.12 most likely. So if we can get there, it would be better to get that breakout bar. There you go. So this would be my first target. That would be my next target. What if we don't get the breakout bar? Then bears will sell. It'll be inside up failure and the bears will sell, get back down to the 99.75 and lower. But it has to close bearish first. Okay. There's a micro support here from underneath 56 to the high of 54. Buyers are probably there. They're probably there. Bulls want to break out, but they have to close this bar now, bullish enough, above 07.25. I can't decide what to do. Bears are stuck underneath 52. They sold and they don't want bulls to break out from above that bar 52, because they know if they allow it, they're going to have to sell a lot higher. So, but would you sell underneath these bars 56? There might be more buyers there than sellers. Inside bar. Bears want at least the midpoint of 52 tested so they can get some kind of a break even. They sold at the 100%. And that's their break even right there, average break even. So they want that tested. They might get it, but bulls on the other hand, you know, want to get continuation here. They know they trap the bears. They know that they might have an advantage here if they can close above 07.25. But bar 52 is very large bar. It's large enough that you know, you would always expect at the upper third some sellers. You know, by design, yes, it's a breakout bar, but within a trading range. So it's a trading range bar to me right now. So how do you sell and buy? You sell at the upper third, you buy at the lower third, and that's what you're getting here. So, but the bulls know, they know that once they can close above the open of 52, many bears will start to exit, like squeezed out of the market very fast, and then they can actually reach right up around here, this area. So they need to squeeze these bears out, and it starts with closing a bull bar above 07.25. And bears know that squeeze can come in, and they want to get the average break even at the 99.75 area before those doors open up, and otherwise they're going to be kicked out, and then you're going to end up getting bull bars back to back up. Okay, so that's the kind of price action I'm expecting to happen, but I don't have the confirmation yet, so I need bulls to close up here. Still no bull close, but you can see it's inching towards that breakout, and bears know that they are in desperation mode, and they're trying to prevent by creating a micro resistance here. Micro resistance is already there. Bulls are just trying to break it so they can get to the next one, and the next one is right up here, 13.25. Maybe a little higher, but that's where it is. Maybe a little lower, 11 to 13.25 is where the next micro resistance is, and the next one is right around here, 66.19. So we could suddenly go and tag all of those. But 3 bars testing the breakout point and nothing. And you can see how hard the bears are trying here. You guys need to see these micro resistance support. Trading is all about support resistance, but if you're able to see the micro levels, you're golden. You'll know exactly when to buy and when not to buy or sell. So for example, so it's very simple, okay? I see a micro support here, right? Micro support, and a bull bar closes. I could start to buy there with a stop here. I would go for a 1 hour, 2 hour. They go to 2 hour and then it comes down. But because now this area, it becomes a micro support. And when it comes down, you can put a buy order there, and that's why this bar, 38, went and closed higher, okay? So now I have a micro support there. So you can actually put a buy order. That means you can buy the close of 38. So where's your micro resistance? Your micro resistance is right here, and the bulls actually broke it. So where are they going to go? The next micro resistance right there. So you bought right here. That's where you take profit. And look, they couldn't break that micro resistance. It's coming down. What bar actually closed? That one. Can I sell it? Yeah, I can sell it. But there may not be too much of a space. But if you do sell it, you should be able to make money wherever the next micro support is. And that micro support is right here. So if you sell the 42 close, your micro support is right there. So this is your reward. That's it. It just went a little bit lower, and then it closed bullish. Well, that means that micro support is holding. Their buyers there. Okay. So if the now, how do you buy? I will not buy because I know bears are going to try to sell, and that's why that bar 45 came down and tested 42 low, because that's where the bears got stuck. But now the bar closes bullish. Now I can buy and make money. And if I do buy the close of bar 45, right, I have to find my micro resistance, maybe there. Okay. Yeah, there. Or no, it kept going there, failed, going there, failed, going there. Now I can exit and sell underneath. Where's my micro support? My micro support is right there. I sell 48. I need to take profit there. I don't know if they're going to be able to break it. Okay. This one broke, but it's already reached a bunch of support areas. Too late, too risky. I cannot sell this bar. Okay. Don't sell this bar. And that's why bulls come in and we go back to the micro resistance. Does that make sense? It's a lot of work to read it that way, but that's how machines read it. So if you start to see it, then you would be like, oh, now I understand why I have to be a scalper. Okay. Or you eliminate in between levels and you find a good support and resistance and hold into those and swing into those. So you scalp a little bit and you leave a runner. It's not the wicks. I'm not looking at wicks. I'm looking at bar closes. Look, going, can't go. So what is that? So mark that for the next time. That's when we reach there, you're going to take profit. So what is this then, Adamski? What is this then? Right. So it's micro resistance, yeah, right? Yeah. So that means if you're long into that and you need to take profit there because we don't know we're going to break it. But say you take profit there and you leave a runner because you want to get to the next one. Where's the next one? Next one is most likely to be here. Okay, look at the bodies. Wicks touching, but nothing closing above. So that means this area is holding. And where's the other one? Right there. So if you say we go up to here, okay, you take profit, it comes down, you're still holding. You get a bull bar closing, you're next, this is where you're going to take profit. You get a bull bar closing, you're going to take profit there. And then you're going to expect pullback. That's how I see it. And you'll see it too. Just one day, play it like a little bit faster, like maybe like 3 times, 4 times faster in a replay environment. And just sit there and watch the entire day. Do nothing. As it plays out, stop and mark those levels. Okay. Use these kind of labels. Okay, like that. Leave them there. And then see how price moves into these levels and from those levels. See if you can actually catch them without marking. It's all about training your eye. So this is the micro resistance and we can't seem to break it. Can we? Nope. So bears already started to sell below 57 and bulls bought one more time, but they can't. So now those bulls are exiting, bears coming back in. These bears prevented 3 times is too much. Okay, so now we're going to come down and test the 99.87. What's going on with this? What do you mean order filled? Hold on, guys. My broker is doing something funny here. I was already filled. Yeah, phantom orders, of course. So this is the part of, like the worst part of being a presenter. Anyway, so bears now got their average break even. They sold up here. They did a good job. They defended this area. Okay, they kept selling from that micro resistance. So now find your micro support. Where is it? Yeah, right there. Right. Look, 3 bars touching that level. We can come down and test that and then get a bounce. If it breaks below, then we come down to here. Or let's see, right there. Yep, that's it. So we could come down to here, we could come down to here. No, I don't know what it felt. It just, my P&L went down. Like good $400. I don't know what happened there. I didn't even see anything. And I looked around. Everything seemed to be great. There was nothing pending. And suddenly I'm in some kind of an order, some trade. You know, Apple was running crazy. She always is very happy cat when I give her her favorite food or the food that she likes. And I know she does these zoomies and start chasing stuff that she puts together, these little balls of paper, okay? And then somehow with her little claws, she makes a tail. So it looks like a little mouse, but it's made of paper. So she's an artist, this one. She makes a mouse. And then she just hits it and goes after it. But generally that happens. She becomes very artistic and very creative if she really likes the food that I give her. It's a weird cat. She does not make a sound. I barely hear her purr. Very rarely she purrs. And she's one of those, you know, forest cats that they're very quiet because they're hunters, so they have to be extremely quiet on the forest floor. So she's got the genes. She's acting like she's constantly stalking me. It's crazy, scaring me too. So I'm her little prey. That's a gene. I expect her to be the next, you know, genius. All right, so it is still trying to come down. Ah, they couldn't close below. So it's 2 legs down for bears. Bulls now want another leg up. They have unfinished business up here, but we need really good looking bull bars. So I'm gonna wait for some levels to be broken. So now there's another small resistance here, look. So if the bulls take out that, we're gonna become bullish and we're gonna take out that as well, okay? So now this becomes the next micro resistance right there, or up here, one or the other. So that's where we're gonna go now. There might be some sellers there, but if the bulls break that, we go here and then we get our breakout. You can almost see it either right there. Here, let me get this out of the way. You can see it on the market. This right here and right there. So this is magnet right here. If they clear it, bulls are going to get the upper hand. Then they're going to get that breakout. And then the next, like this is they need to clear this. Okay? Somewhere like that. And then next there and there. What about the support? That's a micro support. And then there, which was tested already. The reason why they're having a hard time getting up there is because 2 consecutive bear bars. One of them is a very strong close. The other one is a semi-strong. So there might be some sell orders above 60. Those sell orders are activated. But if bulls can absorb all of those orders, they're going to hit the 0475, 0375 area. So I'm trying to find out how strong those sell orders are. If they're strong, we come down and test the 96.75. It was never tested before. There might be some buyers here. If we break it, we come down to here. So it's trying to sell from above 60, but bar 61 needs to close bearish, right? What if it doesn't close bearish? If it closes bullish, then the rest of the orders will be absorbed by bulls, and then we hit there. Okay. So depending on how this closes, you'll know whether we get a follow through or we get a reversal. Then you know these orders weren't all that strong to begin with, and that is a magnet area. So you could say, how do I buy this? Well, one thing that I didn't, there's also another like tiny, this is a breakout test. You could put a buy order there and then look for bulls to get right there into that area. $375 is where they need to test minimum. That's a breakout test with a 2-tick underneath bar 60 is stop and bulls are long. So they want to definitely test back up here. So I have to give them a chance to make money. And if the bulls bought the close of breakout test bar 60, disappointed, they're going to buy lower to break even. Micro double bottom, kind of a bull flag here, but you're stuck in a trading range. You're in this smack in the middle of a trading range. Bears are disappointed with 52. They got their average break even. They want to bring market all the way down to the 52 close, but bulls got another idea because we have a very prominent price action here, which is very bullish. So bulls want these highs to be tested. They want to get to this green line at the very minimum. Okay, I'm going to get rid of that. It's too many things, but you should have it on your chart. So you have to pick a side. Which side do you want to trade with? Do you want to trade with the bulls? Do you want to trade with the bears? To me, I look at the entire day. This is the prominent side, okay, part of the day. It's pretty bullish, and clearly bulls are stuck up here, okay, and they're not allowing bears to sell all the way down to bar 1. So can it sell? Yeah, it might actually start to vacuum soon all the way down, but we need to take out these lows and then we can get a measured move down. So will the bears do that? I don't know. Right now, bulls are trying to hold the bears so they can go right back up. But if they're going to want to sell this, I'll sell with them. But right now, bulls are in charge. So 0375 to 0475 area is the first micro resistance. If bulls want to get a breakout and go and test the close of 14 again, they need to start breaching these levels I marked. And the bears stuck below 52 are trying to make a decision here that can we take out this 65.97, come down to the 91.75, then they will get their break even. And then if they start to close below, they can then start to sell this into the magnet. And once we start to get below the magnet, we could quickly vacuum down. And that will be catastrophic for bulls. First sell underneath 57, second sell underneath 59. But bears got Bears lost their chance here with the 6th bar, letting bulls close above it. So bulls now want to get back up to these highs. So I don't know when it's going to trigger bearish. Second sell is not selling. It could become a bull flag. So it rallied up 2 legs down. So that's high 1. They're trying to get a high 2 to swing up all the way to the high of 56 and then all the way up to the bar 48. There you go. Okay, so, okay, look, they're breaking that. That's good. So now next is 0775. If we close the bull bar above it, we're going to accelerate into that resistance. There, you might find some sellers. Okay, but we close a bull bar above 0725, 0775. Whew, good luck, bears. getting a grip on the market again. Can we get a double top here above the moving average? Still, it could be a bear flag, maybe. But see, I'm going to get rid of these now. They played their part. So we are now at the next is micro resistance. We already breached it, but we didn't close a bull bar. So technically it's not breached, but the bar closes bullish above in 2 minutes and 38 seconds. We go to these ones, and I haven't marked the rest, but you can do it yourself. Next one is right here. And then this one. Bears are still trying not to be squeezed out of the market, but this is it. This is the last call for bears. Either get out now, or they're going to be squeezed out so fast, we're going to end up getting a bunch of bull bars stacking up. If we close above, either 0775, it was 0725. So yeah, 0725, which is the open of 52. We close a bull bar above there. That's going to be the end of bears. Yeah. Bulls trying to get back above the moving average and get a breakout from the moving average to the upside. Bears trying to contain the bulls so they don't have to get liquidated. They're going to want to sell, but they better hurry up. Because if this bar closes above 0775, 0725, adios amigos, we're going to be up here. You know, I mean, it's not easy to trade this, but I'm trying to do the, what do they call it, nitty gritty, greedy. So I'm trying to go into the detail as much as possible to show you guys what I see. You have to turn trading into fun. If you cannot do that, there's no point trading this, is period. Okay, it is going to be guesswork, and you're going to be like, I don't know what I'm doing, I'm losing. That's because you can't see the support resistance, micro support resistance, nitty gritty. Thank you. So and my job is to show you that so you don't do the wrong thing. See, they're going to try to squeeze the bears now out. Those bar 52 should not have allowed 63 to close like that. So now I'm expecting 11 and 13. See if we can get that. And if we close above the micro resistance 13 and a quarter, 66, 13 and a quarter, then the next is going to be the already tested and tired 66.19, which by the way may not even hold. I mean, it could be like a child's play, like cut through a hot butter with a hot knife. Wow, I can't talk today. So because look how many times it's tested. So next time we get here, bulls are going to be like, oh, get out of the way. That door is going to swing like so fast, don't stand behind it. And then they would cut through 19 and they would get to the 25 because that was never tested. Cat got my tongue, yeah. So around 66.19, I want action like that. I posted on Discord. That's what I want to see happening. So any sell orders sitting around 66.19 will be like plow through it. Most likely. Then again, market can make a liar out of me. That's a whole different story. Right now, we need to clean up this place. Okay, right here. Above, you probably heard this saying a lot. The stops above 46, 47, 48, most like 48 and 47 and 48. This is an unprotected area. Any stops being put here, okay, is basically a L calls it a skunk stop. So that means they're going to kill you. Okay, they're going to come in and they're going to run your stop. This is a minor lower high. Okay, even this is minor, but it's much better than 47 and 48. All right, so we need to break above 13 and a quarter. I did buy, yes. I said I'm looking for a market to get to those levels. It did. So I took some profit there, but I'm still holding a contract. I want bulls to clean up this place. Okay. Run some stops above 47 and 48 and get me to the 66.19. That's what I'm looking for. All right. Testing 66.11, but it's the second time we're touching 66.11 and not able to break above it. I don't like that. Okay. So I'm going to get rid of this. I do not like it. There's a support here, micro support here now. All right, so where was it? Right there. I don't want to see a bear bar close below 66.08 because if it does, I'm going to have to look to buy again. And the next support will be right around this right here. Okay. So I want to see 66.11 broken. And I want to see a tag of 66.13 and a quarter. How significant are your runners to your P&L? Hey, if my P&L is going up, they are significant, okay? And that's what their purpose is for, right? Just grow the P&L. I know you're trying to ask something a lot more sophisticated there because my answer is not sophisticated at all. So there's got to be something else that you're asking that I'm not getting. So maybe try again. But that would be the best answer I can give you for that. So any time I'm making money here with a runner is significant enough to me. Oh no, you're going somewhere? Are you going to join another trade room? I will find you. I will find you. I will smell you out and I will find you. Where exactly are you going? Somebody says, Rose, I will miss you after this week. What's happening? Are you getting hitched? Gone? Where you're going, there's no. Oh, are you going back to your daddy? Ah, well, I don't know. I need to have a talk with Tom. You're going back to your daddy. Okay, fine. He won the custody case. Nothing I can do about it. Court orders. All right, so here we go. So I took profit there, 66.13 and a quarter. I'll buy again. Now I can put a buy order where the stops are. So that means the bulls will be breaching 13.25, running the stops, and I will be entering, and my next target will be 66.19. Well, give my best to your dad. That's the best I can say. All right, good luck there. No, he's back. All right, let's see if it goes up to 66.19. Oh, there are more people returning. What the heck? Well, it was nice to meet you all. But if you feel like, if you miss me, you know where to find me. Thank you, Cookie. See, I've got Cookie staying here, Leanna staying here. Good luck with Tom. It won't be as fun as what you're having here. Unless I show up and crack some dirty jokes. I have a new repertoire. I added some new ones. Okay, so we have clarification on the question earlier about the P&L. I meant what percentage of your P&L is from the runner contracts versus the scalp contracts? No, this is a really good question, actually. You know, I've never done the work. I don't even know if I can actually do the work to figure that out. I'm not that math savvy. But depending on how good is my entry. Like if I'm entering down here, okay, and with a small risk, my runner is going to run into 2R. Okay, so here's how I calculate it. First, that 1, 2, and then I can extend this, right? Actual risk. So I got a 1, I got 1.5. So my runner goes to 1.5 and dies. That's it. Because by then I put my stop here and my stop get hit. So all depending on the environment I'm trading and how good is my entry. Did I enter early? Did I enter early or did I enter late? So for example, here, if you entered with this, right? So you're going for a 1R, 2R, and you get the 1R, you get 1.5, and you're not getting the 2R, and it reverses back down. Your stop is right here, but you didn't get hit. So now you got the 2R. You might even get the 3R. Bar 60 did not hit your stop, so you're in the game. So now your runner is running. I mean, most of the time they kick me out if I move the stop to break even very quickly. I try to stay in as much as I can. Sometimes if I'm buying in a really bad place in the middle of nowhere, and I see cluster of micro resistances, I'm probably gonna take profit there and step aside rather than having a runner. I will jump back in around, like I'll put a buy order above the micro double top 47.48, and then when I see bulls actually going, I'll keep adding, and then the next resistance 66.19, I'll scalp and leave a runner for 66.25. Yeah. Right now I'm flat. I don't have anything running. I took my profit. I had to make that money that they took out of my pocket, but I ended up making 3 times more. So I'm in good shape. I don't really need to trade the rest of the day, but there's still tons of time that we can trade here. That's a good idea. Go pitch this idea to Tom Eves. Yeah, I can hear. I'm here anyway. So you have, because he only trades 2 hours a day, I think, right, in the morning, and the rest of the afternoon you're free. You know you're going to make that money come in, and you would have, plus Tom is free, so you're not really paying anything, right? I mean, that's why he can abuse you. That's why it subjects you guys to all sorts of abuse, because you're not paying anything. I have to be professional. I would love to do what Tom's doing and turn you guys into a ragdoll every day, but I can't do it, can I? But that's because you're paying for it. So I have to have professionalism. But we're here all day long, all week. If I'm not here, somebody else, Tim Stout will be here, Brad will be here. I've never done that work, Gene. I mean, I never looked at, I'm not very, how do I say this? I'm not Tim Fairweather. Let me put it that way. He's an accountant. So accountants, by nature are boring people. And they love to live in Excel spreadsheets. I'm joking. Tim is by all means no boring at all. I'm only kidding. But they strive. They love that kind of work. So they just want to spend their life in it. I mean, and that's why he's so good at it. He could just create a spreadsheet. You'd be like, how did you do this so fast? His mind is flying. Tim Fairweather is a very smart guy and a lot of fun too. So he's got a really good mind. But I can't do what he's doing. I mean, I cannot even put 2 cells together, like, multiply them to find a total to save my life or even open a new cell in Excel spreadsheet. Forget it. Somebody put a gun on my head and said, you live if you create the cell. Okay, I'm dead already, so might as well just let's start the funeral. No way. So some people are so good at it. I really don't care. All I care is, am I making money? Am I withdrawing money? Am I be able to pay for my for my bills? That's it. Am I making consistently the same amount or more every month? I just open up my account statement, look at it, and that's it. That's all I care for. I used to do all that work in the beginning, just like everybody else. Oh, I want to look at my this, this trade and that trade. And it gets old, and I'm like, I don't care anymore. It's a good thing to do. You should always do that, but I just don't care anymore. All right, so we're about to take out the 1325. Buy orders are where the stops are. Bulls are betting against bears because they want 19 and they want probably 66.25. Yeah, we're very grateful of what Tom did. That was very kind of him, and we appreciate that. But he is back mid-April. I think that's what he said. I'm kidding. I'm not calling you boring. I was engaged to an accountant. Spent a good amount of years. So I'm only kidding. We still haven't broken above that. So this is why I took my profit there, because it was fresh. But now if we close above it, then that's good news. Okay. This one, I don't care about this anymore. This one's still holding. But if the bears break below 66.08, then we come down to 02.25. So market needs to decide here. This is an expanding triangle bull flag. And if bulls are going to get a breakout there, then I want to see this bar 67 close above 13.25. If flag fails because we have a resistance there, then I need to see not only if fail, come down and close below 08, 66.08, then I would look to sell and collect around these two price points. So this is where I want to see what the market is going to decide to do. It's resistance, right? It's also the apex of the triangle, so you know exactly why we are struggling here. The ultimate resistance. But the moment we break above it, we can definitely go up to those next levels. Here we go. Now is the time. Let's go, bulls. Okay. Just need to close above it. There you go. I had a buy order and I didn't get yet. It's still sitting there. Didn't get yet filled. Still waiting. Came one tick close but didn't fill me. Okay, I'm in, holding for 66.19. We're probably going to get some resistance there, some kind of a challenge, maybe first touch, second touch, but it should break through. And then we should get to 66.25. But I will scalp there, no matter what. No, it already took my order where the stops were. I'm one tick underneath this level, 19. So I wanted to get there. I got a 2-point scalp there, but my runner is not running. So you buy here, okay, and I scalped it, just about got in there, got one out, and got two out, and I was really hoping to get the last one, get to here, but no, they trapped me. So now I have to find some kind of a support here to buy again. The earliest support is, I think, yeah, unfortunately, it's all the way down here, 66.08. So I'm going to have to wait. I'm not going to panic. I'm going to wait. And then I'm going to try to buy again. Making any money. Was I wrong there? Maybe it was here. Yeah, I think I was. See, this is the thing. I took that as the resistance, which is still correct. But then there is this one. I did not pay attention, which is right there. We kind of missed it. Or, no, we didn't. Yeah, we kind of tested that one. So I was a little bit off there, but that's what I'm paying for. So I did take profit there, but held it. Now they trapped me. So now I need to do something about this. So I need to find, either wait for it to get back to where I was stuck. Probably it's not going to do that because this is a very good sell signal bar, 69. There could be sellers underneath that. And I'm going to have to wait for a market to come down to next support and then buy there and try to break even. Unless it goes right back to where I entered, then I am golden. But a bar like 69 will want to sell. So this is a problem now for me. Now I can do two things. I can scale in lower, or I can exit out, take the small loss and exit out. So it has to go back to where I entered. And I don't know if it's gonna make it there. It might. But bear sold below is 67, scalping already. It just needs to test 66.08. It might even come down to the moving average, and then this is where I would buy. There's another area. You could pull all the way into this area. All right, so now it's testing 66.08. Really 08.25. Really didn't tag that yet. But that vicinity. But it can also come down to the moving average since we're very close. Bulls entered with a breakout, scalp, but didn't get a follow through. So they need to either fix it or exit out. And if this support won't hold, we come down to here. So you kind of lace this area with buy orders. You don't put a huge buy order there hoping it's going to bounce from here. It needs to be staggered all over the place. There were buyers at the 66.08 and the moving average. I had some orders there. So if you also measure from the bar 69 low, that's a good place to scale in for bulls stuck above 68, stuck at where the stops were. So they're looking for a break even. Two bear bars. Both of them are actually decent closes. So I don't know if the bulls are going to be able to get priced back up to where they want it. They may not be able to. So we might need to find more support. But I have to give bulls a chance to break even. So think about it. So if I've turned there, buy again around here. It needs to, I actually go right around the moving average. So I need price to get to 11.25, 11.50 for me to get out of this nonsense. And it may not get there because we now have 2 bars and both of them are closing decent. So we could get the 3rd bar, and then I would have to scale in a little bit more or wait for a bull bar at least. And this is why scaling in can be dangerous, is you have to be very careful with your scale in. Like, you can't load it up. You got to make sure you can handle it and you're entering in the right places, right? We've been above the moving average, so when we get back to the moving average, we can use it as a support, but you need a good looking signal bar to buy. These are just limit buys. You're hoping you can get out quicker. It might still come down. It might come down to the 0475, 0575, and then further down 03, 02. Yep, there's a gap here, so I'm sure there are some buyers here in this area. No, just going to come down a little bit more at least. Might test 05, 6605 area, 0525, 05. What about coming down even further and closing this gap? If the bears start to close the gap, we're going to become a lot more bearish. We can end up coming all the way down to the bar 62 area. So, and that would be not so good for the bulls that are stuck up there. So they are kind of desperate to get out. Okay, so I scaled in and I'm looking to get out right around here. I just scaled in one more time. I got filled with a bunch of contracts, but I still have one that did not get a break even. Buying at the moving average to break even, and there you go. Thank you very much. It just went to exactly where I wanted to get break even. So now we're getting a really good looking signal bar to buy. Bulls are getting serious. Something's happening. Is there a news came out again? I'm not really listening. Some kind of a news came out. You guys know? If this bar becomes bar 71 becomes a good looking bull bar, that's your signal bar for bulls to buy at the moving average. I did say that we're above the moving average. Next time we come in, well, first of all, these bulls are stuck here above 68, above 67, above 48. They need to break even, so they're going to buy. I was one of them. So because I got trapped with one contract, I was still holding for 66.19 and 25 and a quarter. So didn't panic, and as the market comes down, I buy. And I got my break even. I don't know how this bar is going to close. If it doesn't close bullish, then we have 3 bars closing possibly on their lows, could be sideways and down price action. We would then end up in these support areas, 475, 03, 02, 25, somewhere around the bar 62. Okay, so just be careful here. I'm already stepped aside. I'm done. I fixed my trade. I want to buy again, but not without a bull bar. So that worked out really nicely. I think the market wants to test. If we close another bar here, we're going to come down, excuse me, to this area. What about the bulls? They want a micro double bottom bull flag. They want to go back and test bar 68 high and higher, but they have to close above 1325 once again. It is now yet another resistance there. Okay, they have to stay above the 6608. They have to get above the 1325. There might be some buyers down here at the micro support. We haven't really tested. I like the market to come down there and still keep the gap open and then go up. So we might need to come down a little bit more. Perhaps test the 0475. It would be nice. And then see if there are any buyers there. That would be a micro wedge bottom, 70, 71, and 72. And if there are any buyers here, 0475, then we would suddenly go right back up. And if it doesn't hold, buyers are down here. Because this is pretty strong and a breakout, and I got a second leg up. So the buyers would be down here. But I'm looking for 0475 test now. Can market come all the way down to bar 52, 53 lows? I mean, first we need to close this gap body, 63, bar 63. Then we need to come down and break below this market support and come down and test this support. And from there on, I mean, yes, they can come down and test, but this whole area is support. Bulls trying to stay above the 66.08 so they can buy this flag and get back up to these levels. So we didn't close a bear body below. So 66.08 by design is a good support, and it is kind of holding, and you got a micro wedge bottom here. So will this bar close bullish? If it closes bullish, it could go up, but you have 1, 2, 3, 4 micro bear channel. I don't know. There's sellers here. I'm not going to buy it. I won't buy until I see a good looking bull bar. I still think that we can come down to 0475, maybe even lower. Only if a bull bar closes strong, we can then go higher. So a bit of a barbed wire situation happening, or micro head and shoulders, left shoulder, head, right shoulder. And if bulls can take out the right shoulder highs and then the left shoulder 65 high, we become very bullish. It becomes a bear pattern, becomes bull pattern. Okay, is head and shoulders is a bearish pattern. It can become a bull flag if bulls start to close above 71 high and then the 65 high. Otherwise, it's a head and shoulders pattern with the neckline broken. Okay, the neckline broken there, and it could still sell and try to close this gap right here. So then we would come down here. But that 66.08 is holding, no doubt. You can see it. So if bulls do come in, I'll buy very quickly. But I want to see this pattern turn into a bullish pattern before I buy. So without a bull bar, I'm not interested in. There are more sellers above these bear bars than buyers. I'm not interested in. Now, bull flags is bulls start to buy the close or underneath the bear bars, like good looking bear bars like 66, 67. Okay. If 72 is not bought at the close and I don't see 73 closing bull bar, then you can't buy. There's no evidence that this is a bull flag. It's still a micro head and shoulders pattern, and it wants to come down and test these lows. So I like to see bears take control, get down to the 0475, finish the job. That is the next support. It's not a concept, it's just support and resistance. It's where the bars open and close and you get the breakout. So it's a micro level. Now on a higher time frame, it's not micro, is it? So it's macro. But you can use the same way. Just test it out. I don't trade the higher time frames, but it works. If it works on here, it will work there. We can do a exercise on an hourly chart, perhaps. There you go. Didn't really test the 0475 though. Okay, so we are now below 66.08. Okay, successfully. We did come down to next one. I don't know if I was off there. No, I was correct, but we missed it one tick. So what do you think is going to happen here? Again, I won't buy. I won't buy until bulls show me very good bull bar, close above the neckline, take out the bar 71 high. Then I start to buy. I would expect bar 69 high tested. But if I buy right here, they can trap me and I don't want to buy it. We missed the 0475, like one tick. I'll take a look at some of the questions here. This question box is ridiculous. So tiny. I cannot even read it. So let me see. It says download questions. How can I? There's got to be a way to pop this out. Can you guys see each other's questions? Can you actually see your other people's questions posted? No? Okay. Put it, okay, now I can read. Okay, now I can read. Okay, so as a rule, do you have limit on the number of points you're willing to sit through when a trade goes against you, even when scaling in, or is it always dependent on the current structure? I mean, I always have a limit. You know, I don't want to lose money, obviously, right? So I need to be able to, if I'm committed to break even, I'll break even. If I'm not, and I see the next support is so far away that I have to wade into it, I'll take the loss while it's small and sell into that support as it goes there, take profit, and then buy and make profit both ways. So it all depends on where I am and how I can fix it. Like here, it was easy, right? I was long, I scalped it, came down. I said bar 69 is not good. If that's a sell signal bar, it probably is going to get a couple of legs down. So the next place I can buy, there was a support there, right? 66.08, and then right underneath was the moving average. So I said, okay, I'm going to buy there, and most likely I will get my break even, and I did with bar 71. So I stepped aside. I wanted to buy. I put a buy order at 0475. I put a bunch of buy orders down here, but none of them got filled. Okay, buyers did buy and went up. And they scalped, but look what you're buying against: streak of bear bars. So I don't know. Maybe it's a good thing I didn't buy. I want to buy, but I need to see this area taken out with a bull close. Then I'll buy. I'll hold again here and there, maybe even higher. So if the area where I want to enter in, it has to also make sense by point wise, and that's either 5 point or 10 point. I'll do that. But if it's more than, you know, I'm in with multiple contracts and I have to scale in 20 points further away, I won't do that. And that's how I determine that, by looking at the ATR value. ATR value says it's 5. That's good. I can enter in. Look. From here, you can measure about 21 ticks. So somewhere around here, you can enter and you would still make money, okay? It goes right back to the bar 68. So anyone stuck above bar 68 or 67, buying 21 ticks, 5 points below, going to make money with the 74 and 75. So those are the things I look at. So if I'm about to scale in and ATR says 18, I'm not touching that. First of all, around 10 point, no one's gonna buy. People are gonna buy around 15 point because that's closest number to 18. It's actually 20 points. So that means I have to sit through a huge red P&L to scale in 20 points from away, hope to make a break even. So that kind of stuff, no. I have to be only in with one contract, and that I can actually be able to sit through 20 points, whatever that dollar value is. So I have that math in my head, and if the ATR is that big, I will up that. I'll take the loss and I'll just step aside. Or I will wait until it gets there and I'll put a buy order. I'll buy with the stuck bulls, and I'll play into their pain trade and make money that way. Next question. What do you do if, not really a question, but you say you are, That's nice. Thank you, Sergio. You and I are becoming friends there, aren't we? Someday I'll come and visit you and your wife. So let's see, Andrew, I think I answered you, right? No, I didn't. Have I? Yeah, I kind of answered you. So that was Dennis's question, but your question is the same, similar to it. So, and we have someone testing, like just testing. I got your test. Next one. You have your ego in check, unlike some others. Ooh, who are we talking about? Give me a name. Now I'm curious. Whose ego is not in check? I will help them check those egos. I think I know who you're talking about, but I'd like to hear more. So tell me, Robert. You are welcome, James. And well, I think you don't need to answer. I think I know because I just saw your broomstick joke. I didn't think that he was gonna read that joke out loud. And he was daring me. So we were talking and I learned something about him. So there's no privacy there. So he just took it and started talking about that. It was kind of embarrassing, but whatever. I think Al wasn't listening, so that's all that matters. I don't think Richard or Ken were listening, so and none of that. Oh, it is recorded, isn't it? All right, let's pretend it's not recorded. Let's see. Sure, no problem, everyone. Does NQ follow your rules? Oh yeah, sure. You do the same thing with NQ. It's just faster, I think. Yeah, let's go to NQ. Yeah, sometimes NQ is a lot cleaner.
Trial.
Okay, so oh, this thing is saying trial suddenly. Here we go. Same thing right there. Okay.
Trial.
Why does it say keep trial? Hold on, I need to report this. Can you guys see my? Okay, can't stop fiddling with my. It keeps saying trial. Who is this woman? Can you guys see my screen?
Trial.
Can you guys hear the trial? Just don't pay attention to that. But can you see my screen? That's all that matters. Yes. Okay. Good. So let's see. Like here, support. Here we go. Right there. See, we tested that support, found buyer. So the next support is right around here. If we drop, we're going to drop right there. Okay. I'm kidding, Ken. No, I was just about to come in and say, what's up with the trial thing? So if we do sell, there's a really nice engulfing bar here, bar 75. There could be sellers underneath. And if we start to drop, this is where we're going to drop. Okay, on the NQ, most likely. So let's go back to ES. Just want to go to my same thing happening on the ES, except it's not a engulfing bar, it's a kicker bar. Now look what happened here. If you were to buy this bar 74, what did I say about market becoming bullish, a bull flag? It needed to clear this right shoulder, right? It didn't. So technically this is still, now this is your actual right shoulder. So now you have a new, okay, that's a neckline. So we're going to come down to that neckline. We could break it, retest it, and we could indeed sell. So be careful here. Bears actually made a much official neckline. So I'm sorry, right shoulder. So now you have this going on here. Okay, this is your neckline. We break below this neckline. We're going to test all of those support areas. Okay, right away, and then we would bounce quickly but then we could sell and reach down to 65.97. So can the bulls still take over and finally close above 13.25? They need to not only do that, they have to also close above bar 65 high to turn this into a bull flag. Okay, technically this is still a head and shoulders pattern with a brand new neckline. Here, I'll take that. All right, so I'm connecting those. Next question. Are the stock bears from bar 2? Yeah, they never got a chance to. And that's why I said earlier, and I actually talked about that. I said we could vacuum down, but it needs to start selling now, right? There's not much time left here. We have about 13 minutes left. In 13 minutes, can market actually vacuum so fast down to the bar 1 low and all the way to here? That's 88 points. So I'm sorry to say this, but we're going to need Trump here. Okay, so somebody call him. And if you really are stuck there, this is the only way we would get down here. He needs to say something. Okay, otherwise, I don't know if we can vacuum down that fast in about 13 minutes or less. Okay, so can't fix the trial, lady. It's gone. Let's see. What do we got? That happened to me too. I've lost my window and I can't see my monitor. And I couldn't find it. I couldn't find a way to appear again. So I exited out of the application, came back in, which is kind of weird, but it worked. I still need to fiddle with this. I'm not understanding quite, but I'm sure it's just a user error. Somebody is asking a question and saying, why is it that nobody answers my question? I don't always come here because of my job, but even when I come up, questions not answered. Oh, it's not intentionally done. That's because I'm not looking at the question box as I'm trading. So I kind of pull these questions for the end of day review. So I'll take a look at your question, but I don't. Okay, here we go. Where's your question? So I'm scrolling down. Here we go. Can you give more details on the upcoming program? Was that your question? So I'm assuming that was your question. That would be the China, I think it's pronounced Macau island, so Hong Kong. There's going to be a workshop there. I believe it's a 3-day workshop, either 4 or 3, I'm not sure. But it's going to be more of live trading than same as Orlando. Orlando, we have longer and more presentations, but this one is going to be more on the, this bar is now breaking the right shoulder, and it's trying to break the left shoulder now, 65 high. So now we're going to go to 66.19, and we're probably going to go to 66.25 too if we break the 66.19. So you can contact Richard from BTC. He'll give you all the information. He's been working hard to set up the dates, hotels, hotel rooms, and the entire venue. So it's going to be probably end of June. Yeah. So yeah. That's going to be probably end of June. I don't know the cost structure. Only Richard can answer that. So please contact Richard. I'm going to take a little bit more questions here. Happy Easter to you too, Robert. Happy Easter to all of you. Today at bar 35, it seems we are in a trading range. Okay. By the way, here, let me clean this up a little bit. So we just reached and tested the 66.19. I'm gonna lock this and clean the rest of the chart because I want you guys to see this. Okay, this was the neckline. You could have You could have just taken that, or right there. Nothing's breaking. So what does that mean? It means we're going to go to the left shoulder. Now we're breaching the left shoulder. So this is now a qualifying bull flag. So that means we're going to now close above 69 high, and we're probably going to now get to, here's how I find, this is the channel. Okay, this is the channel. So that is your measured move. It could get to the 2R right there. And that's a conservative way of measuring. Okay, if you see a bull bar close above 69 and you want to get the full channel breakout, and that would be your target, 29 and 75 or 29.50. Okay, so we haven't really cleared the high yet, nor have a confirmation that we are closing above the left shoulder, but technically this is now a bull flag. So it's trying to extend up to the 66.25 and a quarter. So today after bar 35, it seems we are in a trading range. Yes, actually we got into a trading range after bar 14 and not just 35, because we are stuck within the range of bar 14. So this whole bar 14 is your trading range. So I have been buy low, sell high, scalp using limit order trading. So this is all you have to do. This is a mother bar. Okay, measure it, the entire bar, bar 14. Let me get rid of that. And let me show you where you should have been selling and buying exactly. Buy zone. But really, that's it. And then sell zone, which we haven't tested. So we're going to test. So what the bulls are now trying to go is get to the 6,600. So 25.25 is right above it. That's where they're trying to go. And we're probably going to reach, might even reach 79, I don't know. But there's sellers here. It's never been tested in here. So normally here, if it's never been tested, this is the area where I put my sell orders. Now this morning, look, or midday, this was my buy zone. So I kept buying, right? And then we did this, okay, there's no bear bar closing below 14. I'm still gonna buy. So I extended the zone now. So now I'm buying more, and I am gonna take profit around the 50%. And we can't close above it, so we're done. It's gonna come back. I'm gonna buy again. As long as we don't have a bear breakout bar, I can buy. And that's what you do, keep buying, and you take profit at the 50%. If you see a bull bar close above 50%, then you hold a runner into here. This is where you take your profit and look to sell into the 50%. So this is the first time we're crossing above. So where do you think the price is going? It's going to 24.75. It's going to go there probably. Might even go a lot higher. So somewhere in here, 79 to 66%, sellers are waiting. And this is where we might actually stop. If we start to accelerate without selling, if a zone won't sell, okay, instead it just goes up, then the sellers are there, will come down. It has to sell here. So we might just stop right here. And what happens is sometimes you get these, because it's the end of the day. So if it starts to accelerate and wants to go higher, this is where you're going to get sellers. And then we pull back to where we're supposed to sell. You have to exit them. So right now, this is where the sellers are. We just reached the 66. It's also 25.25. Look at that. We just reached the 25.25. That was the next micro resistance I set, and you would take profit there. Now, can this go higher? It might. I don't know. This is the end of day. Anything's possible. This is where I would be done because it's never been sold properly. There could be more sell orders here, and it may not be easy to break through. I want to do the end of day review. So I think there are some questions here that I didn't answer. Although, let me see. Let me see. Oh, what is this? Try this before. Oh, let me make a note of that. Somebody's giving me a tip. So how do I do that? Windows, key, control, restarting Windows. Well, I'll try. Okay. Thank you for that tip. Okay, so hopefully that was helpful to you all. Delete this. And let me see if there are other pressing questions here that I missed. Can you talk about the mother bar 14 since it seems to be controlled? I just did. So hopefully, Luke, you got your answer there. Yeah, okay, so I covered everything. This is good. So now I'm going to do the end of day review. All right, yesterday, we had a trading range day trading, but after hours we sold because yesterday we had a left shoulder had right shoulder formed with a neckline. Okay, so somehow after hours broke that neckline and we took that trading range and projected down. You get a nice 1R, okay, or measured move. Or you could say, well, what if I just measured this leg right here and project it down for a 2R? You just have to take the, yeah, just about, you got your 2R, but in the morning. But let's take a look at the after hours. So you can see head and shoulders there. This is what I would measure to look for a 2R. We reached that 2R. This is major trend reversal, higher high major trend reversal with head and shoulders that turns into a bear flag. That's what you want. So then is major trend reversals, you need 2R, okay, not 1R. If it's a 1R, that's not a major trend reversal. We'll go back and retest that trading range or the highs again. So is we came down, we made a really nice double top lower high. We came down, that's your 1R, and then we got a 2R sometime around 8:30 a.m. this morning. So this was an ongoing sell-off, spike, and channel down. So eventually we're going to get back up to here and we're going to get back up to here. But that had to come down first and reach that 2R to finish the major trend reversal structure. So it did. So now you have a reversal. This is why L talks about major trend reversals are the best way to trade. It's a swing trading, it's a 2R, but it's 2R swing. And it's great. It's the most powerful pattern, he calls it. And it's also a double-sided trading, okay? Once you reach the 2R, market will reverse. At least it will go half the way up or full way up. So you can actually buy and trade bullish to the side. I mean, how great is that? And if you actually do homework this weekend, first go watch L's major trend reversal videos, okay? And then go to the charts and start finding them. And notice that once it actually reaches the 2R, you now have an option to go long. If a major trend reversal is from the lows, okay, right? You go 1R and you go 2R. Now you have a reversal. You can sell it for halfway. You might even get the entire reversal back down. So that's why they're very, very powerful. So we did do that yesterday. And then is 8:30, we started to bounce, okay? So let's take a look at yeah. So you have is bar 1 and bar 2, and you can even see it there, right? You reach the major trend. The only thing is that I am being conservative here, just taking the bear leg, okay? Even then, we kind of almost, no, we didn't miss it. It's right there. So now we have a gap down, okay? Are we going to keep coming down? This is such a large gap down. Problem with these kind of large, big gap downs, okay? You're probably at some support or some breakout or gap area that is so strong that the buy orders are weighting heavily. And when that happens, a huge gap down may not continue to go lower because bears may not agree to sell this low. So you look for traps, okay? So here's the first bar is a bull bar to begin with. Should have been a bear bar. It's not. So, and it closed on its side but then you get the bear. So the bulls are already stuck there. They're going to start the buy. So what are they looking for? From the low, they're looking for minimum 10 point. Okay, what was the ATR back then? So let's see, that was actually 28, geez. So then it came down to 22. So this is what you would do. You would expect to put a buy order around 20 points because ATR at that time was 20 points, okay? So, and this is what I kind of did, all right? I'm waiting to see if we can get to that 20 points so I can buy because I know bulls might have already both bar one stuck. So I'm waiting to get in. I see the bar two. I'm like, no one's buying. I'm sorry, no one's selling. And the buyers start to show up. Where did they show up? They start to show up around 10 points. Oh, this is great. So we're definitely going to the bar one. And if we close above bar one high, then you have a measured move target to the upside. That's one way. So I didn't have to fix anything. This was perfectly fine. It fixed itself and just goes up. And then I canceled my 20-point order. I didn't have to scale in. That was perfect. But there's another way. You do nothing and you measure. You take about 19 bars. Now you have 3 bars. That's the low, bar 3 low. You take 17 bars. You find a high and you find a low. You do not sell. You either buy. I buy and I look for cross above this green line. Great. Now I'm going to take profit right there. That's the 33%. Look. Once we cross the 21% threshold, we're going to go to the 33 and we're going to go to the 50%. Actually, we're going to go to the 79, but bulls will start to scalp around here. So I'm holding. I'm going to take a little bit off here because I have natural resistance, which is 1 hour EMA, but most likely we're going to get above it and we're going to take, this is what L looks for as a fair price. This is where the earliest sellers could be. Okay, so here we go. Going, and we're there. But now, are we going to close above 74.25? If I'm going to take profit here, but if I start to see bull bars closing, I want to hold it all the way up to bar, not bar, but 66 and 79%. Look at that. We actually ended up going all the way up here, but that's it. So if I actually extend this, this is where you take profit and then leave a runner and see if bulls actually close above this, then you're going to hold it. This is your first breakout target, but you want this, and an ultimate breakout target is 179. We may not get that one. Okay, so but we didn't close above it. Now we're coming down. You can see bears started to close below. This is done. We're going to come down. I don't care how much it goes sideways. We're going to pull down to the 74.50. So we pulled down to here, but we didn't pull down to 74.50. So this is what I expected price to come down earlier, and I kept saying we might get down there, but ended up staying around the 66%. Okay, so you can always say, look, if I see a bull bar closing above 66%, I'm not going to hold anymore. I can exit. Maybe I can buy. Okay, but we kept oscillating around that. So it was just go up to the green line, come back to the 66, go up to the green line, and finally we started to close above the green line. But this is not a quality trading. So what you do is this. You find the next level, which is right there. So now this is what I do. I see something to measure there. I want to see bull bars closing above 21%. Great. Now my target is going to be 50%. You can take a little bit of profit at the 33, but you should be holding for 50. And if you see a bull bar closing 50, then you're holding for 66. There you go. We got the 50. We can't close above it. Take your profit. Step aside because we're going to pull back to 33 and 21 most likely. Oh yeah, we did. And now we close below 21. They can come down to here and even get a breakout, but we didn't. Now we're closing back again. I can buy again. I'll buy the pullback too. And I'm going to scalp a little bit at the 66, but I really want to have a runner into 50. There you go, 50. Test it twice. Still can't close. Get out. It's going to pull back to 66. It might even come back down here. Only if it closes a bear bar below 66%. This one says 33. Same thing. See, and then now we stayed above. Now we go back to 50, we close above it, so we go to 66. See how it works? Clockwork. Anyway, so let's get back to this. Is we're bullish, right? So another way, first I start the measure. That's my measured move. That's great. Now I have gap here. I'm going to take that. That's my new measured move. I'm going to extend this again. How can I extend it? Right there. Right? That breakout. This is the third time I am extending, but this is it. That's my measured move, and I'm going to take profit. Do you want me to repeat this again? Here. It started like this. You don't have more information there unless you did measured way 17 bars from here, 3 bars from here, and you know somewhere here we're going to reach. That's where you're going to take profit. But you also want to know if we're going to get above bar 1. Once we start to close above bar 1, I've got a measured move there. So there it is. So, right. So I'm going to go for that measured move. I'm going to take profit at 65, 62. Good. They're taking profit. Taking profit. That's a profit taking bar right there, bar 7. Oh, we closed above it. Now I'm going to expect, well, I'm not going to expect this, but here's what I'm going to do. There's a gap. I'm looking for measured moves, right? So now I'm going to include that measurement. You can do two things. You could take that. That will be fine. Then that will be your measured move. That's it. Now we closed above that measured move, and we have a breakout. So this is the third time and the last time. I only do 3 times to find the actual measured move, and that's it. And when the price gets there, I'm going to take profit here because it probably is going to come down, and that's it. And from there, let's see, can it continue to go up? I said maybe if we're lucky, we could get to the high of yesterday. Sometimes days like this can actually keep going up and up and up once we start to close consecutive bull bars above the high of yesterday. So I'm looking to see, oh, we don't. So now I have an inside bar and another inside bar. But this bar, this thing is really annoying. Let me see if yeah, never mind. Hold on. How do I delete this? I'm going to try something. It's not working. Never mind. All right, so here's what I'm seeing. And somebody asked this question. Why are you measuring inside bar 15? They actually didn't say inside bar. They say, why are you measuring bar 15? What's the significance of it? It's an outside bar. It's an inside bar. Bulls will buy if a bull bar closes above the inside bar. Instead, you have a bear bar closing, a body below the inside bar 15. I'm in a huge range. I can actually sell this, okay? And here, sell this and find my 1 hour target. That's 93 ticks from the low of the inside bar. But first, this is a large area, okay, a pretty large distance. What I generally do, and what the machines seem to pay attention, you sell 1 tick underneath bar 16, the trigger bar. You have to take profit at the half hour, 65, 96, 25, because it may not come down here. All right. You get an outside bar, lower third of outside bar is a buy zone. And the half hour of this breakout from the inside bar's low is right here. So when a price gets down, when the market gets down to this 96.25, I'm going to scalp there heavily because I don't know if bears can, you know, heavily sell and get a breakout very quickly below 14. Probably not. There are buyers waiting there. So watch. We come down, right? We came very close, and they could not even reach that half hour. So bears sold below 16 are trapped. What they're going to do is they're going to let it go up to the 50% of the mid-range of that inside bar. This is where I put a sell order. So let me extend this, right? So this is where I put a sell order right there, right there. And then I look for a fix. What is that fix? Where did I sell? I sold underneath 16. So it's going to come down and give me a break even. Look at the bar 19. The whole purpose of bar 19 is to give bears sold below the trigger bar 16. And they were looking for a half hour, 96.25, and 1 hour right here, 84.75. So now those bears got a break even. But those bears are upset because they're trying to sell a bear flag inside a bull flag. So who wins here? Who's in charge here? Bulls are in charge. Bear flags can fail. Okay, so they know that they're still in trouble. But in my case, I was stuck there. I was like, why am I not getting that? Why am I not getting that? Fine, I know what to do. I know what the contingency plan. Let it go. 50%, sell there, get break even. Now, if I see a bear bar close below bar, inside bar again, 15, I'm going to sell. Nope, nothing, 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 nothing. Yes, something. All right, I'm game again. So where we're going to go? We're going to go right to the hellfire. Where do you think? You sell again underneath 28, or maybe you sold still, you're still holding. Your job is to take profit there. Now you understand how to trade within the mother bar's range with that inside bar breakout. That's right there. And you know it's the lower third of the mother bar's range or the outside bar's range. You know buyers are waiting there, so you have to take profit. Now bar 30 closed, can they still sell? Yep, they're going to probably continue to sell this. So now you're holding into here, but we kind of bypassed it. And I was kind of upset there. Remember, I was selling this when I got in. I said, I'm selling this and my target is right here. But I kept saying something. I kept pointing out this right here is a one big bar. As long as, look, we can test the low of that bar. That is still above the target. And it took so long to get to a 1R. We're probably never going to reach it. So your best bet is to either the open of 14 or the low of 14, extend it as much as you can. But once you see a bull bar, exit, because this can go right up. See, it did. So now this is no more. Okay. And if there's another, like an outside inside bar, like here, maybe you don't want to trade this because this range is so large and you don't want to deal with that, then this is it. Look, this is an outside bar. This is an inside bar. What do you need to do to sell it? You need a bear bar like this. Now here's the problem. If you sell it, are you going to sell one tick underneath bar 34? Is it a good looking sell? Do you think you're going to get, is this worth selling? That would be the right way to ask. There's not much there, right? So say you sold one tick underneath, you'd be entering 88.75 and your target is 88. So there's only 3 ticks there. Is it worth? No, don't do that. So instead put a buy order there. Okay, buy order there, buy order lower, maybe half R, maybe 2R. Put bunch of buy orders, because as this bar is coming down, those bears are going to start taking profit. You jump in with those profit takers and hold it into the inside bar's lows and you make money. See? Yes, they tested it, but you're not going for that 3 ticks or whatever it is. Okay? So I am talking. You guys can hear me, right? So that means, but instead of, look, don't go for tiny little anything. Go for the, reversal. So put a buy order, and where does it go? Right back to the inside bar. And that's where you take profit, because anybody's stock will sell at the inside bar's low or somewhere in the middle. Look, they even sold right at the high of the inside bar, but they couldn't close another bear bar, so this trade is done. It's done. So now here's what you can do. Look, it's still the same, right? Is outside bar, inside bar, 32, 33. Now we have a bull bar closing above the inside bar. Can I actually use those levels? Here's the problem. So this bar already is a breakout trigger, okay? You're not supposed to buy the close of it. You're supposed to buy 1 tick above. So this is not tradable. So what can you do? Well, you put a sell order right there and you sell back to the inside bar's high. Take a little bit of profit, maybe hold it into the midpoint or to the low of the inside bar 33 and scalp out. Same thing over and over. Now we have a brand new outside bar, inside bar. It is bar 39 and 40. How can I sell this? Which inside bar? This one, bar 40. What do I need to sell bar 40? I need a bear close. Okay, So now another same thing. It's just, is the risk reward worth it? This is where you're selling. This is your reward and this is your risk. No, I'm not going to do that. I'm going to go against it. So I'm going to put a buy order here. I'm going to put a buy order in the middle. Look, this one came in, tagged it and went up. And I'm going to put a buy order here. Once I get in with these two, I cancel this one. I'm in. What am I going to do? I'm going to take profit here. Maybe I'm going to leave a runner to the mid and all the way to the high there. If I see a bull bar close above the inside bar, then I'm going to measure for the bull targets. Same thing. It's over and over and over. It's a great method to trade. Now, I learned this by watching Al's bonus video 15 and 16. I recommend you this weekend, go watch it and then understand what Al is saying. Al is always talking about price breaking out above the outside bar side, okay? But you don't always get those clean, oh, let's break out. That's a flag. And bull flags or bear flags, never that clean, okay? You always go up and down and up and down. But there is an alternative way of trading, and that's by utilizing the inside bars range without getting any breakout for a prolonged time. You can still make money. So I want you guys to go to bonus videos 15 and 16, JVAX 95. Okay, it's the last 2 videos of the entire course. And then come back to this video, rewatch, and see how I'm utilizing inside bar and how I'm trading. It's very profitable. So now we have a breakout. Look, bears are done with this trade. Okay, now bulls got a breakout trigger, like 46 body closed above. Now I can measure that. So now what is my target? Where do I buy? Same thing. Bar 46, you buy 1 tick above, there's no room there. Is this worth it? You're going to be putting your stop here. Your risk is larger than your, might as well just put sell orders here. I would put a sell order where bulls would take profit, there, there, there. Also, something else happened. You should always, I want to eventually edit this script to have a half hours added. Here, look, nothing closing above half hour. We're never going to get to the full hour. So now market is saying something to you. Why don't you sell here instead? 1, 2, 3, still nothing, sell. Or maybe sell this bar. You sell bar 48, maybe 1 tick under. You take profit somewhere in the middle of the inside bars range and then leave a runner to the low of the inside bar. Look where bar 50 actually reached there. So isn't that a better, like you're outsmarting the market, basically. That's what you're doing, okay? You're outsmarting everybody else so they can't see it. This is where, I'm gonna read you guys something, okay? Hang on. This is where the difference between talent versus genius, okay? And this is a saying from Arthur Schopenhauer. I know I'm butchering his name. I don't know who he is, but he says, talent hits a target no one else can hit, okay? Genius hits a target no one else can see. You master this, you are the genius, okay? You're basically trading, market is trading against you. Think of it that way, okay? Because you are outsmarting the market, the machines. You're not interested in Joe Schmo sits next to you. That guy has no clue what you're doing. But market knows, machines know what you're exactly doing. You're seeing their game, their hand. So go watch those videos and then apply. Notice how, okay, the trigger happens when a bar body closes above. That's buyable. But I generally buy 1 tick above. You can also buy to close if you want. Try that if you want to enter earlier, but you still have to scalp at the half hour and leave a runner if that's what you're doing. Okay. So anyway, I carried away. Let's go back. Where was I? I get excited about teaching. So, and hopefully you guys take note. But the only way to get better at it, really take it and then apply it to the market. And take trades. Take like 20, 30, 50 trades doing the same thing over and over. And you actually learn what works and what don't. And you have kind of like, you build a safety net around Okay, I have a contingency plan if this doesn't work, and here's what I'm going to do. And that's how you get a, turn your losses into winners. So, so we're stuck inside bar 14 range. It's actually a triangle, and market is trying to find a way to squeeze. Okay, even if, okay, we start to squeeze out of this triangle. So its triangles are tight trading ranges. So here's how I measure this. Okay, I see bar 28 is squeezing out, and I'm gonna take this as my little range right there. I'm going to exclude the wicks, and I'm going to take only the body. Okay, really the squeeze actually happened not with 28 but with bar 30. So look at that. You sell bar 30, you sell the pullback, whatever. This is your measured move, bar 32. Hence how it bounced. But now it's coming down. It gave you 1.5 our target. Or you can say, why do I have to do it like that? What about these guys? Why can I not take this? Okay, great, take that. And that's part of the trading range, not the bar 15 though. And that's your measured move. Breakout with bar 30, and that's your measured move right there. Done. Okay. So that was a flag. And in the meantime, count some legs and see if you can buy, and see if you can bring market back to the apex of that triangle, contracting triangle that broke out to the downside, because when it reverses, that's where it's going to go, right? So how many legs did we do? We reached the measured move target. We get a leg one, pull back, leg one, pull back, leg two, pull back, bar 30 went above leg two lows and the bull bar's high. And so that is your complex two-legged move down over leg three. So now bulls are coming in. You need at least 2 legs to go up. We go with the 2 legs, right? We reach the breakout bar areas, but we need third leg. So it comes down, you buy the third leg, and then the third leg actually does take you right there, but somewhere around this area. And then we reach, that's your apex. Or you don't need that. You could just simply measure this trading range. Okay. Now I'm not doing a good job there, but bear with me. Yeah, so we reach just about, we reach that midsection, mid-range. And we can't close above the mid-range. That means we're never going to go up there. So look for a good looking sell signal bar. If there are 3 legs up, yes, we do. Leg up, leg up, leg up. So good looking sell signal bar, you is sell underneath that bar. You look for 2 legs down where? 42 low, 43 low. And then second leg started with bar 38 low. So you leave a runner, but you really are targeting 38 low. Okay, so that's leg up, down, down, leg up. So what does L say when you have wedges? First, you're going to target the third leg's starting point, and then you're going to target the second leg's starting point. Okay, and that's exactly what we did there. And then bulls started to come in is because there was a micro support, and bulls were disappointed that they couldn't take out the bar 28 to get up to the channel, bull channel highs to get a breakout. So they're going to buy. They're looking for a double bottom. What are they going to do? They're probably going to get back to the bar 48 high, but their goal is to get to the 28 high. And that's what we did. Okay. So you buy 2 legs, you're holding. We reach the bar 28 high, and then we have to come down. 2 legs down with 68, 70, 71, 72, 74, pull back. Second leg 75, 76, 76, the bull signal bar right from the moving average. Exit out of this. This is a bull flag. Buy bar 76. You're going to be targeting this bear bar, 16 open. I mean, it kind of got there, but it kind of, no, it did get there. I think it actually did test it. I don't know. Maybe it missed it. Yeah, it missed it. It missed it 1 tick or so. But that's the end of the day. What do you expect? They're going to trap you. But until 5 o'clock, there's plenty of time. So that is 25.50. Yeah, we're gonna test the 25.50. I don't have. I only have 81 bars, but look. $25.50. This is what they needed to test. This is what everybody's holding and trap. So we're probably going to test that before 5 p.m. So we're going to get there. You won't see it on the RTH. Okay. So you have is limit order market first, but you can see how it turned into a trap. This became a gap down and bear trap, and then measured move up, and then you start to get is legs. Look, 1, 2, 3, 4. Oh, this is fantastic. I am going to measure this, okay, and I'm going to project it up. That's my measured move. Or take the whole thing, or take the breakout now and go for that measured move. And this is what L would do. L would only measure what he sees first, and that's this right here. So he's looking for a second leg for this, second leg up. Okay, so you want to see bull bars closing. There you go. There you go. So now you're going to hold. You can scalp a little bit here at the half hour, but you got to leave a runner because that leg needs to get up there. And there you go. You got actually a lot more than that. And you would extend it because you have another breakout. That's a breakout, pullback, breakout. So he will say to you, extend us all the way to the 11 high, and then that's your measured leg up. Okay, so there you go. So that was stop order market, which is amazing. That's all you needed today. After this, you could just leave the market and start your holiday. Then we went into a limit order market. How do you know we turn into a limit order market? Well, first of all, a good looking bull bar 14 is not buying. Well, that's kind of weird. Maybe we can pull back to the 50% of it. Will the bulls buy it? Yes, they will buy. But then again, you're looking at, well, I got a really good 2 bear bars here, and 14 is a really nice bear bar. It should sell, shouldn't it? Well, here's your proof. This is a limit order market. Okay, if a good-looking bull bar closes being sold by bears, most likely good-looking bear bar will be bought by bulls, and that's your proof. 14 and 15 bulls are buying, and not only they're buying, they're also getting 2 consecutive bull bars. That means you are now in a limit order market, and you should be looking to sell good-looking bull bars. Now, this bar 18 is not all that great. I don't like it. Okay, so even if they sell, you're not going to get big bear bars because it's not the best bar, right? It's got an upper wick. I don't really like that. So if they do sell, machines sell it, that's because bar 14 needs a second leg. Most likely we're going to go up, and I'm going to look for a much better bull bar to sell. Okay, I don't have any, but I got a much better bear bar, so now I can buy bar 28. So if I buy bar 28, I am most likely to make money, I say, right? But the problem here is this. You buy bar 28, you actually did make money all the way to the midpoint of it. Just like here, you sold this bar, you made money all the way to the midpoint. There's a reason. Who's going to tell me what the reason is that this ended up selling rather than going up? What is the reason? Who's going to tell me? What has happened here that bulls hesitated, but even though they bought it, they didn't get the second bull bar? Look, in a limit order market, I like to see a strong bear bar instead of selling, buying. This is how I know. You get 2 bars at least. That to me right there is limit order market. Okay, look, they're still buying, and even this one didn't. It's not all that great. So this it's just a 1 bar trading range. But how come this is still a trading range, but they're buying this close and they're not getting 2 bull bars? Why did it end right here? How do you know trading ranges break out? What do you count? What do you count to time your trading range breakout? 6 legs. So Noah is actually correct, but it's actually 3 legs. Now he said 6 legs because he's counting 3 for bears and 3 for bulls. So that he's actually correct. So he just totaled it up. So basically this would be your first leg, bears, first leg, bulls, second leg, bears, second leg, bulls, okay? Third leg, bears, and third leg, bulls. So the cycle is completed. Now, what do? You find the mid-range and see if the bears are closing a bear bar. Yep, that's it. Do not buy the close of bar 24, because if you do buy it, it's no longer limit order market. It is now morphing into stop order market. This is where you have your edge, okay? And this is all in the course, by the way. Okay, I even made a mini course, and it's available to you free on the brookstradingcourse.com. Is people don't have access to the course, I took all of the trading range day and trading range trading slides and put together a training slide. And this is where I talk about how to identify the breakout and not to buy, and determine when this limit order is ending and stop order market is starting right there. So what you're going to do is, instead of buying this, you're going to put a sell order there, and then you're going to put a sell order 50%. You're going to sell. That's it. And as you're going to trap the bulls buying, and those bulls are going to exit from underneath bar 30, they're going to fuel the market. Hence, you get a bunch of bars stacking down, consecutive bear bars. All of these bulls bought here now turning into bears, and now you're making money. And that's how you know. Okay. So now we have stop order right here, and it sells with a couple of legs. So I now have a spike pullback channel with 2 legs down. This is great. It's actually 3 legs. So I want to have a reversal back to the spike pullback right here. I want to see a reversal, and I want to see sell twice. If it sells and close the bull gap right here, that's where it's going to go. Then sell the pullback for more. That's a swing. If it comes down to the bull gap but can't close it, then look for a reversal. If the bulls close above that double top, buy the pullback. That's a breakout. Take this structure and project it up. That's your measured move. So let's see what they did here. So now that is right here. Spike pullback, 2 legs down. So when we reverse, you're going to buy, and you're going to close your eyes, and you're going to target the high of bar 29, and you're going to take profit there. Are there any gap bars here? Well, yeah, I mean, it's kind of weird gap, but it's there. One gap is right there. Bears are going to try to close this gap with bar 39, and most likely they're going to try to close that gap right here. If that gap doesn't close, we're going to go right back to 66.10. So let's see what happened there. Bears are selling. Look, twice. We have a kind of a double top there coming down. No, they closed that gap, but this gap is still open. Now we have a better double top. But what if we start to close bull bars above bar 29 high? Then no more bears. We're going to become very bullish. Okay, we go test. Nope, we didn't close. Look, I put my mouse cursor right over 29 high. Where is the bull body? Bar 46 did not close above it. Can you guys see it? Here. Bar 46 in. Now I have a close. So this has a potential of going higher. Okay. So I would have bought this, and I actually did, by the way. So and then I ended up buying and exiting with bar 51. So this actually worked fine. But here's what I do. I mark this, okay, and here's how I trade this. I buy this into here, I take profit, and then I look to see bears selling. Where do I want to sell it? I want to sell it all the way down to here, and I want to sell it all the way down to here. And I actually want market to swing down even further. So I can put a sell order right around here. There's one way to trade it. So you get in with limit orders right around this bar. You can also do this from where the bull bar closed and the high. So this vicinity here is your sell orders should be living. So put a bunch of sell orders there. Sell into where the gap closes, very first bull gap, which is right there. This is where you take profit, scalp it out, because you don't know it's going to keep coming down. It could go right back up again. Okay, so now what you can do is, this one kept coming down. Try to close this gap. You see this gap right there? That gap would have closed right around here, but they couldn't close the gap. So what do you think they're going to do? They're probably going to go right back up again. They did. So now you can buy above these bars, but you have to still take profit there, because there's no confirmation that we are closing above the spike pullback bars high to go long. Okay, now they did. I actually jumped in. I did buy right there. Okay, and I was thinking, okay, this is great. I'm going to take this. I projected up, and that's why I was saying we could go right up to 29.25. Then this happened. 48. I was like, ooh, I don't like that 48. I have two choices. I can exit from below, but nothing closed back in here, so I'm still safe. Then 49 happened. So I said to you guys, I can do two things. I can exit, take a small loss, because this can now swing all the way down, or I can find a support and buy, and with the first bounce, exit. And that's what I did. I bought somewhere here, like loaded up, and it was right here, the high of 44. I got filled, loaded up, and then I barely exit, but I exited. Then see, that became a swing. You got to exit. Bulls are not maintaining their positioning right here to go up like that. So this was the measured move. Normally that's what you get. So basically you get these cup and cup, but it's not breaking out. So you're not going to get, okay, that breakout, that measured move. Once you start to see those bear bars, look to see if the bear's actually taking out these gaps. Yep, they are. So where are they going to go? This gap that they left over. So you extend it, and where did the market go? You sell. You can exit from below 48 and sell as early as there with the stop above 48. That's a perfect risk reward, and your target should hold it all the way down to this gap close. So there you go. But now everybody else is stuck there. They're buying down here. They want to get a break even, so we're probably going to get back up here again. So that's trading range trading. And look where we went to, right there. So now, did we get the breakout? Can we still get the breakout and go up? Yeah, probably. And we did. Where did we go? Right there. So this still worked, but we have to do a detour before going there. So this is going to happen over and over and over and over every day. This happens. So what does it look like? It looks like this. So I have a mental note. You have a spike, bear spike. You have a pullback, okay? Look for at least 2 legs. Sometimes you get 3 legs, small, but that's it. Now you count, mark that bull bar is that pullback, okay? The high and where the body close. Mark it and expect a couple of legs going up. You go along and you take your profit, exit, because we're going to have some kind of a double top there and sell into these gap areas. Mark the gaps. So maybe the first gap is there, second gap is there. So you can sell, make money. If we close that gap, that's fine, but this one left over, we're probably going to get back up again. And we can have a much better, like double top, lower high, or much better double top. Then they're going to sell again. Generally, I look for a beautiful swing because market is to the downside. This area is a swing short area with a small risk, okay? This is your risk, and this is going to be your big reward. So we come down, okay? If we close this gap, pull back, oh, hold it, twice the size. That's how you're going to get your big swing. You get them all the time, but sometimes they're not going to work. Again, let's do it again. So I want you guys to like tattoo this in your brain, because this happens for the bulls and the bears all the time. So here we go. Okay, we're going to go up. That's a trade. Great. Next trade. Come down. Double top. I want to swing, but we cannot close the gap. We cannot take out this low. Most likely it's going to go up. Now, how does this get invalidated? How does the bear swing, short swing, gets invalidated? I turn it into a long swing. Here's how. Mark that high. Buy it again. Take profit right there because you don't know it's going to break out. If it breaks out, look for a pullback. Okay, make sure it sits above this. This right here is projected up your target. Look for this. Second time, fail, go, buy that, and that is your target. And it could even go a lot higher, or if there's a prior high, that's where you're going to target. And that is your basically how you enter and exploit the bears. This, I mean, if you go to David Paul's website, like David Paul. I think he still has videos. You can also ask Tom, those of you going back to Tom. He'll show you these kind of patterns. They're everywhere. Let me see if I can find one. Here, right there in front of you. A little bit messy, but you can go to a smaller time frame. But here, I'm going to show you here, and then I'm going to go to a smaller time frame to show you much cleaner version. Look, that's a spike, that's a pullback, okay? And then we come down. And then where does it go? It goes to the pullback, right? It's now closing. There's double tops are failing. So now I'm looking for, right, up, down, up, one more, better bar, buy, 12. So now you're going to target that. If we start to close above it, now take this and project it up. That's where you're going to go. And that's where it went. I could take this, project it. That was really the target in a way. So you could do that. Or here, the pullback, and that was your 2R, give or take. Where did the breakout happen? Here, right there. So that's your 2R. Where did you enter with bar 12? Okay. Did you get the 2R? No, that's too much. So breakout happened here, failed. If you're having a hard time, I can see it, and you're going to see it in the future as you train your eye. But if you're not seeing, then go to 2-minute chart. Well, I now lost it. Hold on. That was here. If you go to 2-minute chart, you should be able to get a really good structure way. Okay, this is how the swing short fails. Here we go. Maybe even a 1-minute chart, but I can see it right there. So here's a spike, here's a pullback. Here's leg 1, pullback, leg 2 failed. So where are we going to go? We're going to go and test this area. So mark this area. Okay. Look, you buy this is you're going to take profit. You need to, because we're not closing above that bar's high. So most likely they're going to try to sell. Where's your gap? This bar right here. See if the bears actually close that gap. If bears close that gap, they're going to keep selling. Okay, nope. Comes down, goes back up. Now we have a double top. Can they still sell and create a short swing? Maybe. Short swing only will swing if the bull gap closes. Let's see. Oh, nope, that's it, done. So now this is going to be exploited. You should be looking to buy. However, this is now a breakout. This is the very first bar closed above the spike pullback channel. Closed above this, okay? So you're going to look for a pullback once, pullback twice, then you're going to buy, okay? So pullback once, pullback twice, but we're not closing bear bars, okay? I want to buy. I'm buying. I put a buy order above that bar. I'm in. Then this happens. Don't despair. This is a trading range. Buy again. You see this bar, bull bar right here? You bought maybe above that, too high. Doesn't matter. You were supposed to buy the pullbacks. But that bar, from the low to the lower third, put bunch of buy orders. You should be able to fix it. Yeah, you fixed it. That's it. That's L's scalping. Scalping videos, L explains, points out these bars, where to buy. You see a good looking bull pin bar like that, okay? The lower third of that bar, you should put buy orders. You'll fix your problem. And then we go right back. That's good. So now another pullback. Now bulls are buying. This is even better. Now I should be expecting bullishness. Again, same thing. Okay, this is a one pesky, okay, area. It's going up, but it's not getting a breakout I'm looking for. I'm making money, but then it's reversing. That's fine. I will buy again. Nothing closing below that level bearish for me to exit completely. That market could come down here and then break down. Nothing's happening here. It's all bullish. So if I bought and I was long and I'm disappointed I didn't exit, so I'm looking to buy. I'm looking for bull bars. Okay, like there's one right here, there's one right there, right? And maybe, I don't know, that's it. So this is the area I would buy again. And there you go. You enter, and where does it take you? Right where you were stuck. Now you're looking for a breakout. Congratulations, you got your breakout. At this point, your stop down here moves up here, moves underneath, and you're trailing, and great job. And if your stop is right here, you didn't get hit, this one goes and goes and goes. Now your stop is underneath here, this one goes and goes and goes, goes and goes, and then finally you put your stop here, maybe there, you are going to be kicked out eventually. So these are everywhere. Okay, I wanted to give you guys that because I want to send you home thinking about this all the time. Okay, it's there, it's on every chart, every market. If you can truly see it, you're just going to keep trading this over and over. So let's see, same thing maybe here. There's nothing there. It's also for bulls, it's same. So here's a spike, here's a pullback, same thing, right? So you're going to look for 2 legs up, and then that's the pullback right here. You're going to look for a reversal back down, right? So what are you looking for to swing again? You're looking for a double bottom, and then you're looking for a bear gap bars, okay? And if the bulls take out those bear gap bars, that's it, right? We go there, maybe we'll pull back a little bit, second time, and then you start to see bulls, that's it. You go that way. How does it get invalidated to the downside? Same thing, like this. Spike, pull back, 2 legs up, mark this. You can sell this in here, take profit, okay? Now it goes to the gap, bear gaps, but it can't close it, comes back down. Goes again, one more time. They're gonna try, fails, comes back down, breaks it, that's it. Sell it all the way to the prior low, or take this and project it down, that's your measured move, that's where you're gonna take profit. That's what you do. So this was all limit order market. It's going sideways. You can see big bear bars are being bought, like 34, like 42, like 52. Gapping up from the moving averages, good looking bull bars are being sold. Yeah, we're oscillating. Finally, we get a bit of a breakout, but this is where we're probably going to get some sellers. So it gets 2 legs up, falls, 2 legs up, and then finally we'll get the inside breakout, but we already knew it was going to go there anyway. So it was really boring trading the rest of the afternoon. Okay. So Monday, we have a day closed pretty bullish. We're right around the moving average. We have leg, pull back, leg. I think we're going to continue to go up. I think we're going to have to go and test these highs and make a double top there. I do have a resistance here, just about. So Monday we need to get in here. Okay, so we could actually buy and test today's high, maybe even prior Thursday's high, test above the moving average. It's like similar to today's price action. Can you see the similarities? It's very similar to today's price action. So we're probably going to be next week above the moving average, but we could get a double top there. Okay, and then come back down. Here's what I think is going to happen. We're going to go up, and then we're going to make a double top. That's a left inverse head. We need to come back down, make a complex right inverse. Okay, as long as we don't take that out, we start to get bull bars and we get above the moving average. Stop will be between that higher low to that lower low. Bulls will buy and they will target this area. So we're going to go then like this. Market can become very bullish and go 50% of this entire, whatever, I don't know how many legs here, leg 1, leg 2, leg 3, leg 4. Yeah, we could pull back, but it's going to take a long time, but we can go up. Okay, I think, or we're going to get an inside bar. Remember, these are daily bars. So we could get an inside bar. Okay, something like that. And then like a miniature, maybe like a complex right shoulder, and closes as an inside. And then the next day we go. The first bull bar closes above moving average. Do not buy that. That's a mistake because we're going to come right back down underneath. And then you look for a buy signal. Problem here is that this whole area is resistance. So this is so steep that inverse head and shoulders failed. Mark these lows, the left shoulder and the right shoulder, because if we come down from there and take out those shoulders, inverse shoulders, we then sell and reach these lows. That's how inverse head and shoulders fail to become bullish. Instead, they turn into a bear flags, and we test the channel lows because that's unfinished business there. So this area, we're going to pay attention next week and see how the market is behaving. All right, you all have a great evening, great holidays, happy Easter. All right, I will see you guys next week here on Monday. We return. It's going to be Al Brooks and myself, and we go from there. All right, bye everybody.